So this meeting is being streamed live and also recorded by the council for subsequent broadcast on the council's website. So I'm going to ask everyone who's here to introduce themselves for the benefit of any viewers who might be watching the meeting. So I'll start with myself. I'm Matt White and I'm chair of this committee. To my left.
Hi, I'm Councillor Anna Lawton, Chair of Children and Young People Scrutiny Committee.
I'm Councillor Adam Small, Chair of our Housing Planning and Development Scrutiny Panel.
Philip Slaughter, I'm a Scrutiny Officer.
Hi, Councillor Pippa Connor. I chair the Adults and Health Scrutiny Committee and I'm Vice Chair on this committee.
And Dominic O'Brien, Scrutiny Officer.
John O'Keefe, Head of Finance.
Josephine Lycett, Director of Finance.
Donna Carlin, Cabinet for Finance and Corporate Services.
Sharon Eves, Corporate Director of Finance.
Sam.
Zoe Robertson, Programme Director, Wellbeing and Climate.
Thanks. And I think there are a few officers online, and I'll ask them to introduce themselves if and when they speak. Okay, thanks everyone. So we've dealt with item 1, which was filming at meetings. Item 2 is apologies. We don't have any apologies from members of the committee for absence.
No, just to note that in terms of the cabinet members, just had apologies from Councillor Arkell, and also just to note that Councillor Desneves is joining us online.
Thanks, Dominic. Item 3, urgent business. We have no new items of urgent business. Item 4 is declarations of interest. Can members indicate if they have any declarations of interest to make? None. Item 5 is deputations and questions, which I don't believe we received any, so we can move on to item 6, which is minutes. So we've got 2 sets of minutes for the main committee to approve for the meetings that were held on the 27th of November last year and the 10th of December last year. Just to note, the meeting on the 27th of November was the budget meeting, which considered all the proposals that were under the remit of the main committee. The recommendations that came out of that meeting are included in the papers in the budget item, which is later this evening. I think it's in Appendix 9 of the budget item. Right. So can we agree the minutes unless anybody has any issues to raise under those minutes? Are we happy to agree those both those sets of minutes as accurate? Okay. Just to welcome Councillor Ganesh, who's joining. Item 7 is to note the minutes of the scrutiny panel meetings that have happened recently. So we've got 5 sets of minutes provided in the papers. So we've got the minutes from each of the panels met to consider the budget in November. And there's a further set of minutes from the Housing Development and Planning Scrutiny panel meeting that was held on the 15th of December, and that also looks at the budget, but for the housing revenue account. So these are in the supplementary agenda pack, that 5th set of minutes. And the recommendations from all of these meetings are included in Appendix 9 of the budget item this evening. So does anyone have anything to raise from those minutes of their panels? Anything that we need to be aware of? Obviously, the main business of those meetings is the budget, which is what we're dealing with this evening. Okay, so we're happy to note those minutes and move on.
Yep.
Thank you very much. Right, so the first main item this evening is item 8, the Treasury Management Strategy Statement for 26-27. And we're here to receive and make comments on the Treasury Management Strategy Statement, which is in the supplementary agenda pack at pages 17 to 58. So we've got Sam Masters here, who is going to provide us a brief introduction, and then we'll go to questions. Take it away, Sam, please. Thank you.
Thank you. Okay, so
treasury management is management of the council's cash flows, borrowings, investments and associated risks. So treasury management at the council is conducted within the framework of CITFA's Treasury Management Code of Practice 2021, which requires the council to approve a treasury management strategy before the start of each financial year. So this report fulfills the council's legal obligations under Local Government Act 2003 to have regard to the CITFA Code, the Prudential Code, and produce a treasury management strategy statement. I'm just going to quickly summarise some of the earlier sections within the report, just to give you the context of the report. So external context. The Bank of England cut the base rate to 3.75 in December 25 as expected, with further reductions expected in 2026. We expect the rate to reach 3.25% by the end of 2026, and this reflects amendments made following the autumn budget by the Bank of England Monetary Policy Committee meeting held on the 18th of December. Long-term gilt yields, and therefore the interest rates payable on long-term borrowing by the council, are expected to remain broadly stable on average, despite those reductions we see on the Bank of England base rate. Long-term borrowing costs are driven by those gilt yields, and there are multiple factors that go into those rates that keep them artificially high when we compare them to the BOE rates. So things like fiscal policy, inflation expectations, supply of government desk and risk premiums demanded by the market. So unfortunately, we are not going to see that longer term debt cost reduce. For the purpose of the Treasury Management Statement, we have assumed new Treasury investments will be made at an average rate of 3.5% and that long-term borrowing at an average rate of 5%. Local context, Section 3, local context. So on the 31st of December 2025, the council held 1.141 billion of borrowing and 73.2 million pounds worth of investments. And details of that can be seen in Annex B. The council's capital programme and requirement for exceptional financial support are the principal drivers of the council's borrowing. Detailed plans for the capital investment objectives are set out in the capital strategy and capital programme reports. So table 1 details the current projected capital expenditure in the next 5 years, which totals 2.647 billion. with 666 million of that for 26-27, and 100 million of that 666 being for EFS. So table 2 details how the council intends to finance that expenditure, with total borrowing over those 5 years expected to be 1.749 billion, of which 500 million of that is expected to be EFS. So that's 5 times 100 million. The underlying need to borrow for capital purposes is measured by the capital financing requirement. And the council's current approach is to keep borrowing levels below the capital financing requirement, utilising alternative types of financing such as grants, levies and internal borrowing. So table 3 shows our total capital financing requirement over the next 5 years, which is forecast to be 3.293 billion at the end of 2030-31. Of which it is expected that 2.896 billion will be funded by external borrowing. So, and please note that table 3 is a cumulative table. Under CITFA's Prudential Code for Capital Finance in Local Authorities, the council's total debt should remain below its highest forecast CFR over the next 3 years. As shown in table 3, the council expects to remain compliant with this recommendation throughout the medium-term financial strategy period. How much more detail do we want to go? I think that's fine for the intro. Yep. Okay, yep. So that sums up my intro. Thank you very much.
Great. Thank you very much for that, Sam. So we're going to go to questions now. I'm going to look to questions from my colleagues. I mean, I've got some questions myself.
Do you want to start?
I can start if, yeah. Okay, so I'm interested in so there was a few things that stood out to me from this actually, and I know my colleagues have got questions on the size of the borrowing over the next few years. I suppose the first thing that I wanted to look at was just in terms of the sustainability of this level of borrowing, and looking at the various tables in the papers, and obviously, I guess it's kind of quite important to separate out the borrowing in the not for the purposes of this report, but in terms of our feeling about sustainability, to separate out the borrowing that's in the HRA, which is one kind of part of the budget, separate, and how sustainable that is, and how sustainable the borrowing in the general fund is. And a large part of the borrowing in the general fund is related to this expected need to borrow for to balance the budget through exceptional financial support. And if we look at tables 1 and 2 on pages 28 and 29, they're showing that over 5 years we're adding £100 million worth of borrowing every year on year, and obviously we're going to need to be paying back interest on that and paying back the principal as well. But then when you look a little further on in the papers, tables table 8 on page 40, this is showing what looks to me like a different picture, but I can't quite understand how that tallies, because it's showing that although the cost of paying back that borrowing, the total financing costs are increasing every year, the net revenue stream is also increasing, and therefore the financing cost as a ratio to the net revenue stream is staying broadly flat, which makes it look like this is sustainable. And I know that we've talked about this a lot and said that this is not sustainable. So is it possible to explain what seems to me to be a bit of a discrepancy there? Could you switch your mic in? Sorry.
Yeah, so although that percentage seems to be, marginally reducing or just sort of flatlining, in real terms, as that revenue is increasing, by the time you get to the end of 31, 20% of that 400 million is 80 million pounds that you're using in cash terms to service that debt, which is, it's an extraordinary amount of money, quite frankly, and that's money that has not been spent on public services. And if you have that budget, if you have that deficit that you fail to close in prior years, despite the fact that incrementally you might only be adding 100 million, before long, if that was to progress at these projections, that's £500 million you have borrowed for that structural deficit, which is a huge amount of money, and the servicing cost of that, given the fact that those are going to be going over 20 years, is an astonishing, in real terms, it's an astonishing amount of money to spend that is not being spent on the local community. So I think it's slightly misleading, this ratio, and it's just one of many ratios that you could calculate around these figures. But I think it's slightly misleading that you don't see it going up, because our projected revenue stream is going up in line. That sort of artificially makes that look as if it's sort of a sustainable figure, but it really isn't. So.
Yeah, sorry, if I could just briefly add, and I think that this year is probably the first year strategy where we've very consciously separated out HRA, general fund and exceptional financial support. And look, some would argue that whether it's general fund or HRA, it's still a debt to the council. It's just a different way of counting it. So I don't want us to think that, the totality, which we know is high compared to our neighbours and kind of comparator boroughs, and we've seen various stats that kind of makes that look, particularly given our low levels of reserves, that low financial sustainability. And I think we've kind of all seen that. But I suppose there is a slightly different narrative around each of those three areas that I think it's really important to highlight. So, you know, I would say parking exceptional support just for a moment on the HRA, that is probably where that's certainly the level of debt is increasing at a faster rate than it is on the general fund. We've done certainly over the last 2 or 3 years, we've reduced the general fund capital programme quite significantly, and there are further reductions planned for this year. Don't get me wrong, I still think that there is further we can go in terms of our capital programme and really challenging ourselves around, you know, what's essential that we should have given the levels of debt that we have. But we have got quite a tight grip and scrutiny on that. So I think if you were just looking at the general fund on its own, you without EFS, you would see hopefully a move in the right direction, trying to curb those level of debt. Unfortunately, due to, you know, the increase in demand, increase in price, you know, the reliance on exceptional financial support is the only solution that we have at the moment. So as much as we're doing everything we can to reduce the general fund capital programme, we've got exceptional support going the other way. You know, and it does come with borrowing costs. It does come with the principal repayment that we need to make. Now, we have to do everything we can to try and reduce that reliance on exceptional support. But I do think that is a 2 to 3 year plan that we've got. The HRA is a slightly different narrative in the sense that, and I know that the HRA business plan went to scrutiny panel back in November. That debt is increasing at certainly a faster pace than it is on the general fund. But actually what we can see in the HRA business plan, that actually over the 10-year period, that does generate significant amounts of income in rental from the dwellings. So that there is a slightly different conversation that we have to have in terms of the HRA and the general fund. There is a question on the HRA about the levels of debt. I mean, they are high, and whether that is affordable. And you will see on table 9, I think it's table 9, which shows those comparative ratios for the HRA, which does show the level of interest that we're paying compared to the level of our income is increasing. So that is something that we will need to address over the next kind of year, and certainly when the next business plan comes. It isn't sustainable, you know, kind of 500 million of exceptional financial support over the next 5 years. That is our working assumption. Let's hope we're not in that position, but I think at this stage it is only open and transparent to give the position on where we are and what we could potentially be looking at. And hopefully that drives a different conversation around, you know, the need to make changes around financial sustainability.
Thanks. Can I just come back with a
Of course.
follow-up question on the HRA part of that, which is I'm looking at table 9 and seeing that, you know, it's the financing cost as a ratio of the rental income is almost doubling over those 5 years. Is that if we were to go out 10 years, then is that because there's a kind of hill that we've got to get over, which is, so I suppose the question I'm asking is that because our programme to build council homes is in some way financially unsustainable, or is it that we've got to get over a hill where the investment will eventually start dropping, and the rental, as the completions happen, the rental income will increase and will drop back down to sustainable levels?
Yeah, so the report that you're seeing today does just give the 5-year position, but when you look at the HRA business plan, that will give the position over the 10 years, and it does show, so we measure the sustainability of the HRA business plan by the level of surplus, so the kind of contribution that it can make to capital, which we know our target is 8 million at the moment. It's pretty challenging in the next couple of years for the HRA, but actually when you start to look particularly for years 6, probably 5 to 10 actually, but maybe 6 to 10, you see that increased income coming through both from the new build, but also we're putting significant capital investment into our existing stock, and therefore reducing, because say the level of empty properties, you know, making sure that more and more properties are kind of in operation, which is then generating that income stream. So the HRA business plan, you know, you do almost need to look, well, you should in theory look over a 20-year period, because essentially the investment that you make is, well, sometimes up to 40 years, but it's just a very difficult couple of years for the HRA. But yes, you do see you do see that increase in income in those latter years from both new and existing stock.
Okay, thanks. Right, so I've got some more questions, but I'm gonna hand over to my colleagues now. So I've got Councillor Small and Councillor Connor. So Councillor Small.
Thanks, Chair. Just on this HRA point, because obviously we have looked at this within the scrutiny panel. I think it is just worth noting that that Taryn is right. Taryn is setting out the position that that ratio does change again as you complete the current building plan, but it does make certain assumptions in the longer term around investment or investment that hasn't yet been assumed or projected. So it assumes that the council house building programme will stop in 2030, that there'd be no further need for further housing, etc. So it does make that assumption, and also and this is a sort of wider question of scrutiny, but the fundamental assumptions behind the borrowing in the HRA are not, and we get to this in the recommendations, are not really scrutinisable in the papers we receive, because the debt management in HRA is very different to the general fund in that you don't have to, you're repaying the interest, you're not repaying against the asset. So when the papers set out that we cover ourselves, we cover our costs and so on, it is to service that debt rather than pay it off. And so there is a longer term question around the HRA around its sustainability to continue to hold that level of investment as debt, even though you're servicing it year on year and the cost of servicing that. But if I could just ask a question, Taryn, your comments around the HRA, I would say, are markedly different from what we hear on the scrutiny panel, or what we heard on the scrutiny panel around the level of concern around the level of debt. When questioned on it, I would say officers were not dismissive of concerns, but very much along the lines of this is completely in line with normal practice. In fact, we have a response to one of the recommendations which sets out our interest ratios are good, our debt to asset ratios are good. Some further digging seems to suggest that these are sort of self-imposed. So just to be really clear, from your perspective, even though the borrowing to fund the HRA programme is bringing in additional investment, is bringing in additional income in the long run, and it has its own set of rules separate from the general fund, it's by your mark, the level of borrowing is still too high.
Yeah, so it is slightly different to the general fund. So we don't, in the HRA, there is no legal requirement to allow for the repayment of the principal as you do have to in the general fund. And in the HRA at the moment, so the costs that you see are just the interest costs. So I think that is very fair. That is something that we will, particularly if debt is going to continue to increase, I do think that is an assumption that we will want to revisit in kind of future years. I'm not saying as part of the 26-27 business plan, but we will want to as part of future plans. And I've been really open and honest about that, given, that you can have an upward trajectory in terms of borrowing, but we need to have some kind of plan in terms of repaying that as well. So that's where the minimum revenue provision, but we will revisit that. Revisit that as part of the 27-28 business plan, not 26-27. The level of debt is high. I don't think we can not say that. Now, we are choosing to invest in our existing stock. We're choosing to invest in our new homes, and that is the right approach. However, we have an internal target, I should say, of kind of making an 8 million contribution towards capital. You will have seen from the business plan that you saw in November that we're not at that level, and therefore, from my perspective, we should be reviewing the HRA business plan the same level of due diligence that we have done on the general fund over the last 18 months.
Thanks, Taryn. I guess what I don't understand then is that if I'm assuming that greater minds than me have previously assessed why the HRA should not carry debt in the same way as the general fund, and presumably this is linked to, one, that you're gaining assets, two, that there is a bit of a crisis, and three, that no one pays their mortgage, well, unless you're very lucky, you don't pay your mortgage off in sort of 3 to 5 years, but you might over 30 to 60, etc. So I guess what I'm trying to understand is we surely have a higher tolerance within the HRA for debt levels or for what these debt levels represent than we do when we're just looking at the broader figures. I guess my concern is that some of the debt laid side by side of what it's costing us for the HRA, what we're borrowing on the HRA capital, what we're borrowing for EFS, what we're borrowing for general fund, loses that for the EFS you're paying 600 million, you're borrowing 600 million in order to just keep filling the pot, whereas for the HRA you're investing £1 billion to have £1 billion worth of properties and assets and income generated. And how in the HRA, from your perspective, can we continue to be ambitious with the investment and carry a certain level of debt that is manageable?
So I should say it's not unusual in the way we treat our HRA and the debt. It isn't unusual, you know. I would say more authorities treat it in the way that we do than kind of otherwise, but it is a choice. Whereas, as I say, on the general fund, there is a very clear statutory requirement and accounting practice about how we need to do it. How that came about, somebody would have made a decision, and like I say, it isn't unusual because you do have the assets, the kind of the homes there. We do allow for an annual depreciation charge as well, which is essentially built into the revenue account as well. I suppose where I'm coming from, it is just we need to look at all of those different ratios, all of those different indicators around affordability, those prudential indicators over the next couple of years, particularly if we want to be ambitious, and we absolutely do in terms of, as we are with our new homes, but also our existing stock, just to assure ourselves that it is still affordable. And so we need to revisit that each year. I would say my preference is that we would start to make in future years, we would start to make a provision within the HRA to repay some of that debt, because I think we all kind of recognise that you've got to invest to get the longer term gains. But equally, I do think that we need to challenge ourselves hard on, given where we are at the moment financially, that we should be looking at whether we can start to repay some of that debt. Now, the benefit of the HRA is that we don't have to. And I will need to make that judgment each year. It's not right at this point. I think interest rates are still high, but let's revisit that kind of in future years. It needs the same level of scrutiny and due diligence as what we've done on the debt. We need to assure ourselves that the debt that we are accumulating is for all the right reasons and it generates a future financial benefit. That's the challenge that we need to give ourselves each year.
I don't think scrutiny was about that. So I think additional clarity measures that, and if there's an officer in the room who can, as I understand it, as Tara and I just outlined, measures the HRA around good practice largely self-imposed. When we're talking about these ratios of debt to asset values, of interest rates and so on, there is not a sort of widespread marker for all councils to accept themselves to. And that, I don't think we have enough scrutiny, or we don't currently have enough of a grasp on that to identify whether these are the correct markers, they're giving us the correct output, and et cetera, et cetera.
Okay, just to answer that, obviously our job here is to make comments on the Treasury manager's statement.
Sorry, perhaps greater clarity on how it is different, how we are in the Treasury Management Report, what the markers are, perhaps. But yeah, I think largely it's a recommendation for future scrutiny.
Okay. So maybe if we just provide those comments about the clarity of the distinction between the two parts of the budget. Are officers clear enough in terms of how we're going to phrase that in terms of recommendation? Yeah, you got that. Okay, thanks for that. All right, Councillor Connor, you had some questions.
Thank you, Chair. So I wanted to sort of pick up on I think the speed of borrowing really, and at 4.1 on page 36, it says, and that goes back to the table that we've just been looking at on table 3, but it says the council held 1.14 billion in loans as part of its strategy to fund the capital programme. The balance sheet in table 3 indicates the council expects to increase its borrowing by up to 489 million by the end of 26-27. So for me, that's an absolutely enormous increase. I think I actually tried to do the maths on this on the calculator. I think it's 43% increase in borrowing over roughly 1 year, which I'm a bit concerned around that from maybe a different perspective. I think when we've had our audit reports from KPMG in the past, they've said about how we monitor, the spend and the procedures around how that's monitored and the rest of it. So I know we've got another audit report coming up on Wednesday, which we don't know yet what that is. But for me to spend that much money in that short space of time, I would say that, if we were, if we had double the number of officers in the room, in our availability and all the rest, I'm not quite sure how we're spending that much amount of money in that short space of time, and whether we can do that in a way that gives us confidence that the oversight is good enough and the governance structure around that. So I think I just want some reassurance around that. And then I wanted to talk about we go back to the EFS on the table 3 on page 30, where it's 603 million pounds in 2031. That has been pointed out earlier is just the spend on, just to pay off the debt, the gap in the budget. So for me, it's really a question of, do we think that's and I know, Sam, you said at the beginning about actually these are large numbers in this report, and I think it's just a question back from us is, at what point do we as councillors go, hang on a minute, how much is getting to that point of too much? Because I know that we can set our own limits, which gives us that headroom, but how much is too much at that point? Thank you.
As Taryn has said, first of all, we know that exceptional financial support in terms of borrowing, the amount of money that is required, if nothing changes, is not sustainable. I don't think anybody in either the officer or political executive for 1 minute thinks that borrowing the amount of money that's in these papers is sustainable for even the medium term that are in these papers. Taryn obviously has to put in the best projection and cannot assume things that haven't happened. And that's why the figures are as they are in terms of what is in the papers, because we can't pull figures out of the air. But at the same time, this is not sustainable. And so the only way for us as a council to reach a sustainable position is a very detailed form of, first of all, the capital programme has to continue being looked at. And my preference is for it to come right down, because we can't afford, as we've been discussing this whole meeting, the amount of capital spend of both EFS and the rest of the capital program. But that is looked at constantly. But in terms of the council itself, a couple of things are required. First of all, the council has to look at not wholesale, but at a transformation program in terms of things such as prevention, etc., not just looking year by year in terms of what cuts you can make here and there. And that officers are already starting to work on, but that is a long-term, not a long-term, a medium-term plan. That's not something you can deliver in a year or 2 years. That's something you're going to deliver in a 3 to 5 year period. So first of all, we have to be looking at how we deliver. The second things that are happening are the things that the government is doing on that side, and the assumptions that we have made, but that we are not necessarily, that we don't know yet how they're going to change. So, for example, the government has now committed to fully funding SEND spending. Now, that is a considerable cost that we carry, and the government is going to be completely funding that. There is a review that's going on at the moment into adult social care. We know that there is huge concern, and we're doing a lot of work around temporary accommodation. I'm talking about our big kind of spends, and also children's social care. So in addition to what the council will need to do, there also is work going on within government, because let's be clear, the position that Haringey is in, we are not unique. It's the reason that we're a little bit ahead of other boroughs in this is because we don't have the reserves to actually, so other boroughs may be a couple of years behind us. But the number of councils that will be going into EFS this year will increase. At the moment, local government funding, we come back to it, is not sustainable. It's not enough money. What we see in Haringey is increase in funding driven by demand. And so it's not a sustainable
But we've been
position.
through this a number of
We've
times, so
been-
we know
yeah,
we
but-
know that there are structural
I want
problems
to-
and that we need
yeah.
action by the government.
Yes,
So
exactly.
let's not just
But
repeat
what
what we've been saying.
I want us to just bring us back to that, because in terms of the figures that we have here, those are at the moment the breast projection. But we all know that that's not where we are going to need to be heading, is what I'm saying. Thank you.
Thanks, Donna. And I suppose just a couple of points to add, almost coming back to your question about, when do you as councillors start to kind of worry? When are those red flags? I think we've talked about some of the concerns. We have to talk quite openly about the high levels of debt. From my perspective, I do think you need to look at the 3 different areas. So from an EFS perspective, we had put, could be a best case, it could be a worst case, but we put a scenario within this report. It is I suppose, the role that overview and scrutiny will play is, is the council kind of looking at everything it can kind of to reduce its reliance on exceptional financial support? So I think, there is that sort of conversation in that space. In terms of the capital programme on the general fund, as I said, I feel over the last couple of years it has reduced significantly. There is an increase in proposed, as you will see from the November report, predominantly into, kind of schools and essential maintenance. So we will always have statutory responsibilities. I think we will always need to increase our capital investment. But I think, the scrutiny that you do as part of the budget process is, have we got a capital programme on the general fund that we think is achievable and can be delivered? But equally, there will be, affordability is quite a difficult phrase now, because when you're reliant on EFS, you can almost say that nothing's affordable, but we still have those statutory responsibilities. So, there is that challenge of are we doing everything we can to look at the capital programme but still maintain those statutory responsibilities? And then, as I say, the HRA, which kind of we rehearsed already a little bit tonight, is a different sort of challenge that you have in scrutiny. You know, kind of we can see why we're doing the capital investment. Can we justify the increased level of debt because actually it's the long-term sustainability of the plan? So I think in answer to your question, Councillor Conway, it's almost looking at those three different drivers of the borrowing, and almost there's a different challenge on each one as to whether we should be concerned. But you know, we cannot shy away from the fact that our debt levels are high. Now, on the EFS side, you know, we need to do everything we can to minimise that, but we know from the cost of our services that that's going to be quite difficult to be without exceptional financial support. Certainly over the kind of next couple of years, as Councillor Carlin has said, it will require quite a fundamental look at the way we deliver particularly statutory services.
So I think the question I was posing to yourselves on page 36, to increase the level of borrowing from 1.4 billion by nearly 500 million in a year, that seems a substantive amount. I think it was about 42%. So I'm asking more about the governance and the sort of, have we got everything in place that we can do this, and we won't get an audit report in 2 years' time going, oh my goodness, what happened here? Because you took on, you nearly half again as to what we were doing last year.
Yeah, I mean, it should be noted that a lot of those will be accrued costs that just simply haven't been paid for yet. So a lot of those invoices that come in that last quarter of the year will be for works that have already been carried out and perhaps are going through snagging or sign off. So, go ahead.
And I would just say, in terms of the EFS, there isn't really anything to deliver. I think, you know, kind of you're coming from the, you know, can we deliver a capital programme of the size that we've got? From the EFS side, there isn't anything to deliver. It's a number in, but I think, you know, I think it's a really good question in terms of, you know, we have historically had higher levels of kind of non-delivery in the capital programme compared to what we would have liked. That, you know, I've sat here many a time saying that's what we need to address. You know, be careful we're not too ambitious, and even if we didn't have financial constraints, we wouldn't be able to deliver anyway. The governance is in place, so that all of those schemes we've when you see the new capital programme come through, you will see that we've done some work on the profiling of the spend to try and get that as accurate as possible. For all new schemes coming through, we have a more robust capital governance process whereby everything will need to have a business case and go through a series of gateway controls before it goes into the capital programme. We're trying to do that retrospectively for schemes already in the programme, but it's a bit more challenging, but we've definitely got that in place going forward. And we are going to put the same level of scrutiny in on the HRA capital programme as well. Where you will see that is, you know, whether we can demonstrate that we're having the impact and we are delivering is through the quarterly monitoring reports. So that is where you, as both scrutiny, overseeing scrutiny and also the panels, will be able to see that. But there is much tighter grip and governance before something gets into the capital programme for new schemes. Like I say, we are trying desperately to do that for schemes in the programme already, but it's quite difficult to go back retrospectively. But we are trying to get the spend profile right. That is really important. Sometimes we're overly ambitious in terms of how quickly we can deliver something. Sometimes forget it takes 6 months to get through perhaps a democratic governance process. So even when you've got through my internal capital governance, there is then a democratic process. So, you know, sometimes we forget that actually it does take longer. So we are, I wouldn't say we have achieved it all, but there is definitely the governance in place now to get us into a better place. Thanks.
Thanks. I just wanted to come back on something that Councillor Carlin said, because I know we've heard it a lot and say we need to keep looking at the capital programme, we need to keep making sure that we can cut that down as much as possible. But when you actually look at table 1 on page 28, and the 2/3 of the capital programme currently sits in the HRA. And when you look further down the line, you know, from March 28, March 29, it becomes a much larger proportion until it's almost all of it. So this really sounds to me like if we're going to be making inroads into reducing the capital programme in a way at addressing the large amounts of borrowing, we're going to need to be looking at whether we want to continue with our house building programme. So I'm asking you directly, are we considering dialing back or cancelling our house building programme? And if not, how can we possibly reduce the capital spend then, given the figures that are in table 1?
When I talk about reducing capital spend, the housing program is the house building program is slightly different, as you know, because we are investing on new assets, they bring in rentals, and every single scheme has to wash its own face. So while, and we've had this discussion already, while there is a need for us going forward, for Tara and for us to consider when is the right place, and it will depend on interest rates and everything else, when is the right point in time to start considering paying back some of the loans and actually putting some of that into the budget for the HRA. The amount that's being borrowed on the HRA to build council homes is the right thing to do, and where it's not a matter of pulling back on our council house building program. What will happen is that if the costs are high, for example, the schemes have to wash their own face, and so the schemes will be slightly changed, which has happened more recently, to make sure that those properties are affordable. But are we talking about cutting back on our house building program? No, because our house building program is in the end also going to save us money in other ways. So we need to, Haringey traditionally had fewer social housing, fewer numbers of social rent properties in Haringey, council homes in Haringey, than other boroughs, partly because of when other boroughs such as Hackney, etc., built after the Second World War, the bombing that happened, the space that they had to build, etc., and they built social housing. And Haringey didn't have that, so we've got our estates, but we don't have the same amount as they have in some of our neighbouring boroughs. So are we going to stop that? No. When I say we're looking at everything, obviously in terms of the HRA, that is looked at constantly to make sure that each development that goes ahead washes its own face and can go ahead. And what's quite good on that is we're also buying properties, and sometimes buying them at quite a good price, and that then increases also the rentals that we get in. In terms of the general fund, as Tara said, we constantly have to look over and over again, is everything absolutely necessary? Is everything necessary now? Is this the right time to do it? Is this the right way to do it? So each thing has to be looked at slightly separately. In terms of EFS, as I've said, that is not sustainable. We know it's not sustainable. In the medium term, we need to really be, and officers are already working on, how do we get out of this position in the next 3 to 5 years. So that's kind of where we are on.
Okay, but it's a no.
But that is a no.
It's a no. Okay, thanks. I mean, I do think that there's probably further investigation that needs to be done, given what it says in the tables, and you're saying, well, the schemes wash their own face, but then when we're looking at the tables that are showing an increased pressure in terms of the amount of, but I don't think we want to go further into this now. I think this is something that the housing panel could be looking at.
If I could come in, I think what would be useful, obviously, and I'm sure Scrutiny will do, is to keep a very close eye on it, as you do, going forward, and ask the questions, going forward, year by year, budget by budget, and during the year, as each of the quarterly reports come through, to say, what are you doing on these things, and actually scrutinise.
All right. Thanks. We're coming towards the end of the time that we've got allocated for this, so I'm just going to ask for some brief final questions. I've got one myself as well, but I'll go to colleague.
Thanks, Chair. I guess the part I still don't understand is, just say, this hasn't been said, but let's just say, for example, you were to scrap all the investment in the HRA, you're not closing the £600 million gap with on EFS. That is not money that then covers, because these are different pots. And if anything, arguably and probably quite likely, you're going to see an exacerbated need for EFS, because at the same time you're not doing anything to deal with the housing crisis which residents are also facing, and over the core, even the investment that we're making in council housing doesn't touch the sides in terms of what we actually need. So considering the HRA as a different pot, I can't understand, I'm still trying to understand the connective tissue between having an HRA pot which is investing over a 30 to 60 year period in assets which make a huge difference to residents' lives, and dealing with a £600 million gap in your day-to-day service provision. And the second one I just make very briefly is I do think it is important that we also, when we say that the £80 million interest is money that you're not spending on public services, of course that's true, but it is a consequence of spending £600 million over the previous 5 years on public services. And so you can save the 80 million, but you would have to find £600 million of service cutbacks in order to save that money, to not spend that money. So it's not quite as clear cut as 80 million quid on public services or nothing, anyway.
If I just come back briefly, so the HRA and the general fund are accounted for separately. Some of the nuances of local government accounting, that is just essentially, just to be clear, the exceptional financial support all relates to the general fund. There is no requirement, there is no, I'm going to say, no risk or very little risk at the moment of our HRA ever requiring exceptional financial support, but we need to keep an eye on, we need to do the same level of due diligence as what we have done on the general fund. Where there is a link is essentially, so social housing, kind of new homes, acquisitions, finding people their permanent homes is part of the HRA. Temporary accommodation, which is one that it's I think it's our highest pressure now, is absolutely general fund. Now that's where you get the link. So the more that we can do in terms of providing new homes, new permanent homes, actually reduces pressures in temporary accommodation, which does then reduce our reliance on exceptional financial support. So that is the only real link, and it's just the nature of how two things are accounted for, that temporary accommodation is general fund and kind of permanent homes. So does that answer? Does that? Yeah.
Thank you. And I
Yeah.
think it just clarifies, residents and so on also might watch the committee
Yeah.
if they wish to.
Yeah.
It does just clarify sometimes these things get mixed up of different pots of money which can be used for different things and have different consequences.
Thanks.
Sorry, if I could, and that is because, just as an aside, the duties on homelessness sit with the council, wherever your housing sits, for councils who still have an arm's length or whatever, your homelessness duties sit firmly with your council.
Okay, so I think I just wanted to make one last point around table 3 and table 4. So I've still got in front of me a capital financing requirement of 3.2 billion on table 3, and I've got a total MRP, the minimum amount of money we need to pay back, in 30, 31 and 38 million. And then I've got the final page of the report, which says the current financial position. I think what I found really hard as a councillor is that we're given the tables, but it's not necessarily unpicked for those of us who haven't got a financial background as to where we need to be looking at as councillors for the risks within these reports, so that we can then ask you to sort of clarify that, or we could then ask for that reassurance back, because I'm still left at the end of this meeting with those as my headline, huge. We've gone from 1 billion to 3 billion in 5 years. Now that to me just gives me a whole level of anxiety. And I don't really understand within this report where you tell me it's going to get better, or that this risk, or that this is manageable. And I've probably missed it because I'm not a financial person, and I probably haven't read. Now, I'm hearing what you're saying about the HRA, and I'm hearing what you're saying about the house building. That's not what I'm asking at this point. I think what I'm asking for is around that reassurance that this paper's saying we're in a serious position, but it's not really spelling out how that is going to be addressed in a way that can give us confidence. Thank you.
So apologies, probably not the response you want, but that's not really, it's outside of the scope of this report. So this report is about how we manage the council's borrowing. So the principal drivers of borrowing for our local authority are your capital programme, and in this instance EFS. There is borrowing also around sort of maybe the shortfall of like your education grant, for example, but those are very short-term timelines. But this report is around how we undertake that borrowing and how we manage the associated risks with the temporary surpluses or deficits that we might have. What you're referring to is typically going to be addressed in the capital strategy documents and the capital programme, and it's unfortunately outside of the scope of this report. Although you might want to view these two reports as two counterpart reports, but that's addressing that risk is not the scope of this report. This specifically relates to your borrowing and investment activities.
I suppose it's when we were given the briefing before, we were told, we were shown how we were compared to other councils, and at the end of it they were saying, well, there's red flags now, and so we're hearing these, this as councillors. Now within this report, I completely understand you're just giving us the factual information, but I think what's really helpful is then to sort of give us that factual information on how that is, is this continuing, as my colleagues have said, is this level of borrowing continuing, is this, what's your long term? Because I think Councillor Small was sort of going into a bit more detail around the HRA. I think we do need some understanding of that in order to be able to understand this paper a little bit more easily. And maybe it's just because I haven't got that financial background, but I think, without sitting on the housing panel, sometimes it is a little bit more difficult to understand. So I think within this report is how you put those figures and give that explanation underneath. Sometimes the explanation I didn't find didn't relate to the table above or the bit below. So I wasn't quite sure what was happening within those tables, and I didn't really understand what those figures were saying. So thank you for tonight for going in early and talking us through, but we had a very limited time to look at these papers. We only got them on Friday, and we've got the meeting today. So I think today it's just really hard, and I think we just need a little bit more support in understanding this so that we can ask you all the right questions.
Can I just come back briefly? And I think that's a really fair, well, one, kind of the short timescales for the papers, but even, looking at this report in isolation doesn't give the whole picture. Actually, this is one report in what I call a suite of budget reports, which consists of the main budget report, the capital strategy, the capital programme. And actually, when you look at those reports as a totality, that's where you kind of get the context. So I think that's a really fair challenge. We'll kind of take that away and look to see how we can address. So essentially this will go on to, after audit committee, on to cabinet as a suite of, there is 4 reports. For me, there are 4 reports that make up a suite of budget reports. There's the main budget report, there's the capital strategy, there's the HRA business plan and the treasury management strategy statement, and they are suite of reports that sit together that tell the whole kind of context of kind of where we are. So I think that is a really fair challenge, and let's take that away for kind of future. Thanks.
Thanks. So I'd just like to finish this item off. We've talked a lot about borrowing, but I wanted to ask a question on the investment side. And specifically page 42, paragraph 5.4 about the ESG policy. And I'm actually thinking about a decision that was made by full council back in I think it was March of last year, where it stated that the council should avoid investing in companies that facilitate breaches of international law, including arms companies, tax companies, and the banking and investment institutions that finance them, and resolve to explore ways of divesting from any funds exposed to businesses involved in unethical practices. So I'd just like to know how that decision last year is reflected in the ESG policy, what changes have been made to our investment policies, and what effect any such changes are having on the returns on our investments. Thanks.
Yeah, well, okay, so we have a very sort of limited group of counterparties that we invest in, and these are principally done through our investment portal, which is ICD, which offers very good reports on who your counterparties are. So we are able to scrutinize the funds that we invest in. We are able to scrutinize on a counterparty level where that money is sitting with. So we are able to determine we are able to determine if any of them are directly involved. If any of those funds are directly invested in companies that develop arms, and we've done the due diligence, and we are happy that none of the funds that we invested in are the direct counterparties are arms developers. Now, it becomes more difficult if those are financial institutions, because it's a game of then sort of chasing where does that money ultimately sit, and obviously we know this is a very difficult prospect to do. I mean, in 2008, nobody could actually tell us where that bad debt sat, because of that sort of nature of that, the sort of web of counter investments, etc., etc. But we know that through the funds that we invest in, we are 100% sure that we are not investing in firms that manufacture arms or provide arms or involved in that industry at all, or even provide services in those sort of occupied territories and those types of things. So yeah.
Okay, thanks. We're running out of time, so I'll leave it at that. I can't see any final questions. So thank you very much. Thanks, Sam, for that item. Right. So we're now moving on to item 9, which is scrutiny of the budget and the MTFS. And because this is the budget, I need to step out of the chair now and hand over to Councillor Connor.
Thank you, Chair. So we're now looking at agenda item 9, as Councillor White's just mentioned. So it's scrutiny of the 2026-27 draft budget, the medium-term financial strategy. So we're going to start by looking at the main budget, which is on page 65 of the main pack.
Sorry to interrupt, Chair. I believe Rachel Sharp and Joe Beatty are sat outside, and I wonder if it's because they're anticipating joining this item. Sorry to interrupt.
Well, you did, I think. Thank you. No, we'll pause just for a moment. Welcome to the meeting. So we've got Joe and Rachel who've just joined us. So I was just saying, we're just going on to agenda item 9, which is the scrutiny of the draft budget. So we're going to look at this. So we'll take some questions on the main budget. And Sam is right. We're taking on the treasury management strategy in our heads, plus this. Hopefully will give us a rounded picture. And then we're going to go on to our budget scrutiny recommendations. So that's the main part, but we always do the initial part, which is just some questions that anyone might have actually on the main paper, which is in the main agenda pack, page 65. So if you can all sort of go into that. So I'm just going to look to if anybody wants to speak to this. Taryn, I didn't know if you're saying a few words, or if we're going to go straight into the report.
I think straight into report. That's
Yeah,
okay.
No, that's absolutely fine. Thank you. Okay, so I'm going to look to my colleagues to see if there's anyone who's got some questions coming up. So Councillor Carlin, we always do this because we've just had the Treasury Management Strategy, and there's some parts of it that actually correlate quite nicely with the budget pack. So we always have the opportunity, we always give our members the opportunity to ask any questions they'd like to at this point before we go on to the budget recommendations. So asking just if anyone's, so Councillor Small.
It's actually just a point of clarity when I was looking back through. On page 79, the gross chart 1, 25, 26 gross income. Can I just double check, is it right that council tax is 10% of our income?
Councillor Small, you caught me out. Are you back looking at the November report?
Yeah.
Okay, can I come back to that question? Sorry, let me just quickly open it. I was
no
looking at
problem.
recommend.
Councillor Small, no, that is not actually correct on that table. So that will be corrected in advance of the main budget going to Cabinet and then to full council.
30%, I wonder if they were the wrong way round, something around that.
Thank you for that. Okay, so I'm going to ask a question because this combines the information treasury management with this report. So we've just been looking at the capital borrowing, which was then we've got is a cumulative revenue gap by 2031. So I think we were talking about sustainability and just your thoughts, apologies, my mic went off, just your thoughts around the forecast budget gap plus the capital borrowing that we've got in the treasury management strategy and the EFS that we've already just been discussing. So if you could just give us a narrative around how that's going to be dealt with by the council. Thank you.
Yeah, no, I'll probably respond with some of what I was going to say under the next item, which was my verbal update. So table 6 in the report was the position that we brought back in November. So that would have been kind of what we would have known back in October. We have worked quite extensively over the last couple of months trying to look at kind of almost our reaffirming, shall I say, looking at our budget pressures. So, I'm really keen that we get the budget as accurate as possible. You saw in November, the proposed savings that were coming forward. We've also looked at some of our corporate assumptions, particularly around interest rates. So, all of the figures that kind of make up this table will have changed over the last couple of months. Plus, the table 6 that you are looking at made some very optimistic assumptions around exceptional financial support. I hadn't at that point submitted the application, so just go back to the previous item. The figures that you were looking at in the Treasury Management Strategy Statement were based on the December position, which is more up to date than here. When we are currently finalising the full draft budget for 26-27, that 5-year position as a result, not just of exceptional financial support, but other movements in factors, that budget gap over the next 5 years will have increased because of the scale of the numbers that you've just seen under the previous item, which won't have been included in this November position because we just weren't at that stage of estimating it. In terms of what we are doing, I'm quite happy to say something now about kind of what we are doing. So, for maybe all the reasons we talked about briefly under the previous item, we've got to assure ourselves and do everything that we can as a local authority to minimise the amount of exceptional support that we need year on year. So right from now, even in 25-26, we know it's not sustainable. It probably is the only option from government at the moment, but the rate at which our demand and our prices are increasing, it is far outstripping any increase in demand. And I'll say a bit about the settlement later as well. So we are, so we will continue to, I've talked, I think, quite extensively when we brought the Q2 report about all of the spending controls and the restrictions that we put in place, trying to reduce our spend and reduce that reliance on exceptional financial support. However, when 72% of your budget is spent on statutory services, particularly social care and kind of when I say housing, I mean general fund housing rather than HRA, actually it needs much more structural changes in terms of how we meet those requirements for us to kind of get closer to that less reliance on exceptional financial support. So that is where we will be focusing over the next couple of years with an aspiration to, you know, be less reliant on exceptional financial support in 3 years' time. I just think those more radical changes, you know, the focus on prevention and supporting people, you know, to almost supporting people to kind of look after themselves, etc., or stay out of residential, you know, that takes time to achieve. You know, that isn't something we were ever going to be able to achieve in 26, 27. But, you know, that and all the things that we're doing on temporary accommodation, we've got a whole host of initiatives, actually, which I know you'll hear about at panel. That again will take kind of 1 to 2 years, you know, 18 months, 2 years for us to really see the benefit. So that is where we need to focus our attention. So we do need to bring in the spending controls, and they will be here for, you know, as long as we need them. But actually we need a fundamental look at how we kind of meet those statutory those statutory kind of requirements in a different sort of way. And I think that the temporary accommodation is a really good example. You know, the acquisitions program, you know, kind of really reducing reliance on kind of hotels and bed and breakfast. You know, Cabinet took a decision back in December, I think it was, to look at, you know, ways to bring other finance into the council to support us in that space. That is all really great. It's all kind of tools that we can use, but it just takes time to have an impact. So hopefully, you know, the budget report and my section 25 statement, which is now a separate appendix to the budget report, will set out in full exactly what we are doing, particularly over the next kind of 6 to 12 months, ready for the 27-28 budget.
Thanks. Yeah, and obviously, you know, we go through this process regularly, and we talk a lot about the structural problems, but I just want to kind of like slightly play devil's advocate here and push back a little bit on what we always say, which is, oh, you know, we need to do everything we can to minimise the amount of EFS that we're going to be using, and there's something that slightly troubles me about that, which is we do have a structural problem in terms of financing our services, right? At the moment, we haven't got enough money coming in to meet our statutory needs, which is why we're needing to get EFS, euphemistically titled EFS, which is actually permission to borrow. I know that there's stuff we need to do to make sure that we're doing everything right. We're doing everything in the most efficient way. Of course, I'm not challenging that at all, but I just think we need to be aware also that some of the need to some of the pressures that are causing this spend in these demand areas are a result of previous efficiencies that we've made, previous savings that we've made, and that maybe we should be thinking more, well, maybe there's an argument for saying that if actually we borrow a little bit more this year in order to invest in those areas that are going to, in the long term, help to reduce that demand in those demand-led areas, that would actually be a better way of working. So maybe we just shouldn't be trying to reduce the amount of EFS at all costs, because there's a long-term benefit maybe of spending up front.
I think that's what I said previously. I think that's really the important point, is that the only way that we get out of this position is wholesale transformation, and looking at that, and for all officers and all directorates to really be looking at what, you know, and it goes, it's not just the demanded service like adults, it's also things like our making sure that our corporate property is delivering rents. We're maximizing the amount of money we get from our assets, such as our parks. We, you know, all of the looking across the council, it's not just a matter of cuts, it's also a matter of growth but looking at it as a whole council transformation to actually change how we're delivering services and it's a medium term program. It's not something we're going to see in next year's budget or and this is something that officers have to work on, because if we carry down the same path and certainly I agree with you, what we mustn't do is cut services that deliver a short-term saving but a long-term cost, and it is arguable whether some of the things that were cut previously may have ended up costing us more now. So that's, we've got to be very careful to make sure that we're looking at the long-term sustainability. We're horizon kind of planning at where we want to get to and how we get there. And that's really important, and that's a lot of work, and it's difficult. And it's difficult for officers, difficult politically when you're facing the kind of pressures that we face. But it's the only sustainable way for us to actually do that. And you know, and a lot of that will sit within adult social care in terms of prevention, etc., in terms of how we run the services, in terms of making sure that we do the financial assessments on time, which may take additional resource. All of those kinds of, you know, it's every single directorate needs to be looking at how we do that. And if we do that, I have no doubt that we have the talent within our council for us to do the work and to get there. But that's the way that we have to think about it, I think.
I just want to comment very briefly on what Councillor Carlin said, because I'd go even further than that and say even on things like, you know, the maintenance of our streets and all of these things, the conversations I have with people on doorsteps, you know, and people are just, oh, everything feels rubbish now, everything feels rubbish, and these affect people's state of mind, people's long-term, people's mental health, and these have knock-on effects. And I genuinely believe that spending money on the general maintenance of our borough and all of our services long term makes savings. I think it's been the savings that have been made to our budget have been self-defeating in the end, long term.
I agree with you and I don't agree with you. I mean, when people say that, please do point out that Haringey is one of the very few boroughs where if you report dumping, it will be cleared within 24 to 48 hours. And a lot of boroughs don't have that. I mean, the fly tipping in other boroughs, which is not the same. But look, there are places that we do have to reduce. It's both. We do have to reduce spend on some of the things that we're doing, but we have to have a long-term plan.
Just add two really quick points in the sense that we've now got our funding envelope, should we say, from government for the next 3 years. So it may not be as much as what we would have hoped for, but at least we've got some certainty. So I do think I absolutely agree with Councillor Carlin about kind of thinking across the next 3 years. The only other thing that I would add, and I kind of say this from an officer perspective at the moment, is, it is a different conversation that we have to have with government about those, those statutory responsibilities and, the root causes for some of the excessive demand and price pressures that we are seeing. We're hearing some positive sound, although I haven't seen the detail yet on SEND, but actually we also need to see something around adult social care and temporary accommodation. And, there might be some things on the horizon, but actually the timescales are quite vague. I don't think I've seen anything on kind of, so it's those sorts of conversations that also need to happen, because there will come a limit as to what we can do. We need to assure ourselves that we've done everything that Councillor Carlin has just set out. But I can't sit here tonight and say to you whether that will be enough and reduce our ever need for exceptional financial support. So, it's those two things together that I think need to happen over the next 3 years.
So I'm just going to make a request really. So we've had the information on page 30 of the Treasury Management Strategy around the EFS, which is and I know Taryn, you very clearly said at this moment that's a projection. That's what you've estimated at this current period in time, but that's gone up from, as you said, 10 million in 25 to 603 million in 3031. And we've got on table 6, we've got the budget gap. So obviously that's now completely out of date. So I was going to ask that when we do scrutiny again, when we've got a quite a substantive update, if we could maybe have an appendix to some of these tables so that we can just sort of say on budget on page 93 of the report that we've been handed today for our main scrutiny, just to let you know that there's an addition to that and to look back at table 3, or just to give, because we've scrutinized these really effectively and we've drawn it all out, but if it wasn't, it might have been missed, and then people might not be looking at the right information to ask the right questions. I don't know if that's going to be in children's or if that's going to be somewhere else. So what's your time frame? Thanks.
Yeah, so in terms of that, so that's almost a paragraph that's described probably what Councillor Carlin and myself have just described just then. So the focus at the moment is on the delivery of existing savings. So across 25-26 and 26-27, we have got essentially just over 50 million of savings to deliver. So back in November, you saw the new savings that have come forward for 26-27. Quite small in number, but there were significant ones that were previously approved. So that is not a small amount, kind of almost, it's about 53 million in total. And from the Q2 report that we haven't fully delivered, or we're not on track to deliver those. So we have made a conscious effort as officers to focus on the delivery of the existing savings. It's been picked up by KPMG as part of their audit report last year, and we are seeing their report this year. So I think that is right. Like I say, it's not a small sum. Then we need to, we need to give that assurance to ourselves that, first of all, that we're on track to deliver that 53 million. That's the focus. That work that's described in paragraph 13.6 and the budget report that goes to Cabinet on the 10th of February, which is the next main report, will set out in a little bit more detail. Essentially, that work will commence very shortly. And so as officers, we will be working on that certainly over the kind of next 6 months, ready to bring forward almost as part of the 27-28 budget process, but it may be that we might consider some things earlier in the year. So usually we just consider things at budget time. There might be opportunities to do things in year, and that for me is really important, because although we might set a budget on an assumed requirement of exceptional support, doesn't mean we have to draw it down. So anything that we might be able to do in year is really important, but that will come through the democratic process and decision making. So you won't see, there is nothing that you will see new before the draft budget goes to Cabinet on the 10th of February and full council on the 3rd of March, but that work is about to start imminently. But I needed some assurance, and CLT needed some assurance, and Cabinet, that we were on track to deliver the over 50 million of existing savings before we start to layer new savings on top. So hopefully that gives you rough timescales, and hopefully gives an indication that we are thinking about a kind of almost a 2 to 3 year plan. now rather than just next year.
I'm going to ask the very obvious question that you've almost led me into. So are you on track? Are you confident at the moment about these 53 million? What's your sort of current position?
So in terms of the current year, which is 30 million, so you saw the position at quarter two. We're currently working on quarter three. There will be some non-delivery of savings in year, particularly around the cross-cutting savings. And I think we had quite lengthy discussions about that at quarter two. That it will be hopefully a slightly improved position, but we won't have delivered them in full. We are assuming for 26-27 that they will be delivered in full. There are a couple of savings that can't, because of a change in direction, can't be delivered, but they're very, very small, and they have been written out, or they're proposed to be written out the budget for next year. But largely we are forecasting that we have to deliver that 53 essentially by March 2027. So that's what we're working for, and you will be able to hold us to account and scrutinise us through the monitoring reports. There is always some risk. We have probably tightened up on the assurance that we've got before we start the year. There will always be some risk, and I think this was included in the November report. I have increased corporate contingency to allow me to manage some of that risk, but our aspiration should be to deliver those savings in full. You know, we've gone through each and every one, still be delivered. You know, those ones that are not achievable have come out. Yeah, that's all I can say. Really, we need, you know, we set those savings, we're in control of the delivery.
Well, that's segueing nicely into the budget scrutiny recommendations.
Could I just challenge?
Yes, of course.
Sorry, thanks, Chair. I just wanted to actually challenge what it says in paragraphs 13.6 and 13.7 on page 93, because these two paragraphs taken together seem to suggest that it's possible to fix this gap in the budget by reducing services, by stopping doing some things that we can choose whether we do or not, and somehow that can fix the problem. Yet we've heard repeatedly that 80% of our spend, and the gap is much greater than 20% of our spend, the 80% of our spend goes on statutory services, which we don't have any choice whether we provide them or not. We may be able to find ways of doing them more efficiently, but that's not what these paragraphs are talking about. These paragraphs are talking about doing a review and deciding where to make cuts, where to decide, oh, you know, we do something now, we're not going to do it anymore, and we'll save money that way. So I don't think that this is really a fair thing to be saying, that we can somehow fix the problem by doing a review of what services we're doing and doing reducing services. It just seems that this is kind of pointless even saying this. So I would like to recommend that these bits are taken out of this budget report.
Suppose the question then goes back to Taryn, because obviously this report is, and you're saying about the 53 million pounds and, you know, and the time frame that you had for that. And I asked you about what you were specifically looking at, and you saying that there were things that you were going to start that process, didn't you? So based on what you were saying to me earlier, how does that sort of tie in with the challenge that Councillor White has brought to the table?
Yeah, so look, I appreciate the number. You look at the numbers and it almost looks impossible. I mean, paragraph 13.6, I've consciously said addressing a budget gap rather than closing a budget gap, because I don't know, given our, you know, as you point out, kind of between 70 and 80% of our spend that goes on kind of those three main areas, until we have done that work to really understand what could be possible. You know, it will reduce the budget gap, but I can't tell you at this stage by how much in those future years. There could be an element of prioritisation. So, you know, kind of in line with the council plan's priorities, we know that we're coming to the end of the current council plan. it may require kind of reprioritising some funds. We haven't done that work to be able to facilitate those discussions yet, but I can't sit here and say to you that those changes will be enough to close the budget gaps that you are seeing there, which I've always also alluded to tonight have increased because of exceptional financial support. But I still truly believe, and this is my personal belief, as we said, as a 151 officer, that we should be doing everything we can to reduce those budget gaps as much as possible. So even if we have a reliance on exceptional financial support for the next 5 years and possibly beyond, who knows, that we are keeping that as low as we possibly can.
I suppose what I'm asking for is some honesty about the situation in how we're presenting the situation to the world. And although it's true, we do need to do everything we can on our side. Ultimately, looking at the figures, that's not even going to touch the sides of the problem. And an honest statement here would be something like, you know, the only way we can fix this budget gap, this structural problem, is if there's a fundamental change to how local government is financed, to what the responsibilities of local government are, what the responsibility for social care is, what the responsibilities for dealing with homelessness is. This kind of thing, but we're not really being straight about that, it seems, in this report.
Just briefly, sorry, Dana, can I just briefly come back on that? I think that's a really fair comment on this particular report. I mean, I think if you want to put that forward as a recommendation, but I think you will see a different stance, and certainly my section 25 statement in the report, which I think Councillor White absolutely picks up on some of the points that you've made.
And you know, as this is it's got to be everything, Matt. We have to look across everything, and although our spend is on those statutory services, we also have to look at how we make sure that our statutory services are being delivered in the most efficient ways, and how we reduce demand, and how we, you know, put in prevention, and how they're actually working to make sure they're as efficient as possible. We know, you know, there's a lot of work going on in temporary accommodation. There's a lot of work going on in adult social care. There has been a lot of work going on in children's, which is pretty tight, which doesn't mean that there aren't still savings that can be made, even, you know, within children's. So I think we have to look at everything. It's really hard to kind of step back and kind of take a look overall for officers at everything. But it's going to be a combination of savings, but not savings that are necessarily just cuts, because as we said, that doesn't, you know, if you just cut and salami slice, it doesn't necessarily lead to better outcomes, and it might just be a short-term saving, and then next year costs us more. But it's a complete transformation piece, and you know, when we benchmark against other boroughs, there are things we can do. For example, in adults, there are things. You know, this is a well-run council, and it's not a council that wastes huge amounts of money, but it's not to say ever that there aren't things that we can also do that make us better, and make us more financially sustainable, and that's what we have to be pushing at and looking at the whole time. And it's not an easy piece of work. It was an easy piece of work. You know, the easy stuff, or whether that was, as we've said, in the end led to greater costs on some of the things that were done 10 to 15 years ago. You know, that was kind of like, oh, we'll just close all of those, like adult services and children's centres, and, you know, things that other boroughs are thinking about. Haringey's already done that. So it's not, you know, we have to go back to remembering that the changes to the formula that were brought in under the coalition government took more money out of Haringey than most other boroughs, and the cuts that this borough had to make you know, considered outer London funding, we didn't get the inner London, all of those, all that history has led us to where we are now. And it's not easy, but I do think that things that we can do.
Thank you, Councillor Colin. I let you carry on there for a bit because I realise you probably wanted to make a longer point, but I think we're going to have to keep the response a little bit shorter now just because of times. But I have got Councillor Small and Councillor Lawton, and Councillor Lawton hasn't spoken yet. So obviously, please do give weight to Councillor Lawton's answer questions. So Councillor Small.
I want to make clear, Councillor Lawton has said I should go first, I think because we're disagreeing. But I do think, I understand Councillor White's point, but I do think otherwise the panel is starting to veer into the realm of political choices and political consequences if we were to ask officers to set out those kind of positions. And I would rather, I understand the tension because throughout all the reports there is a narrative that we're discussing around budget and financial requirements. Not least because everyone would have missed it. Not least because I don't think it is quite as tangible as is suggested around certain investments yielding certain results, and therefore it is appropriate that officers set out, not very specifically, I admit, that salami slicing budget is not a salami slicing. That salami slicing budgets is not a financial sustainable position, and that fundamental reviews of service delivery are necessary. The shape of those service deliveries and so on are I would say a place for political scrutiny and not a place for a financial report.
Thank you, Councillor Small. Councillor Lawton.
Councillor Small indeed assessed correctly that by letting him go first, I get to have the last word on this, which I knew I disagree with. But I think whilst I totally take that point, it's exactly the point I thought you were going to make, and I think it's a really prudent one. I have to say that I was about to come in a couple of times, and Councillor White sort of said it for me, which is why I didn't say it. But I do really agree, because I think this is slightly misleading, because I do think it leads us to believe, even on a very financial, non-political perspective, that we can address this budget gap by fundamentally reviewing our services. And I think that without being more honest and saying that equals huge cuts and very different looking services, that just isn't the case. And we've discussed it a million times, and we don't need to go into it again, that the reality of this is that the way we are funded simply doesn't match, and we are playing by rules that we are all agreeing aren't going to create a balanced budget long term or a debt level that we can deal with. And yet we are consistently saying, but we'll keep play by those rules and make sure that we can do all the things. And I think that the reality is that we do have a really big gap here in what we're talking about. And I have to say that I agree very strongly with Councillor White's overall position here, which is that these two paragraphs are, in my opinion, misleading as to what they can manage on a financial level, whether or not our political aspirations may be different. On a financial level, this isn't about prioritizing the most vulnerable, etc., because we know that the very basic level of the services that we are producing now simply cannot continue if we don't borrow an amount that isn't sustainable. And so I have to say that I do believe that even on a very basic financial level, we have to be more honest on these levels. And I think, Taryn, that in general, the way that you address and the way you give us that narrative is really honest and is really transparent. And I can't speak on behalf of my colleagues, but I feel like I can, and say that we're really greatly appreciative of that and feel that that is hugely useful. But I do think that saying that kind of fundamental review is where, if we really do the soul searching, we will address this problem. I just don't think there's anything to say that that's the case, not from a kind of political side or an officer side. Have I ever seen that to be the case? And I have to say on that, I agree with Councillor White.
So I'm going to sort of, well, as I'm chairing this part, I'm going to sort of look at my colleagues and go, oh, so Taryn, I suppose the question really is, we've had the argument around actually looking at this from the purely financial perspective, and Councillor Carlin saying, well, we do have to address everything, we do have to look everywhere. And we've also got colleagues around the table going, actually, are we being truthful in saying that? So as a Section 151 officer, because this is obviously your statutory responsibility around making sure that you can evidence that you have done everything you can to ensure a balance or, you know, a budget that is sustainable. I'm going to say not balanced at this point. How would you reflect and look at those two paragraphs? Do you think, where are you coming down on in terms of the questions that have been posed?
Yeah, so look, I think you know, listen to all, I think it's a really fair challenge, you know, when if you were reading those at face value and you perhaps hadn't heard me openly talking about the context and the challenges, I suspect the reader could interpret them to say, oh, actually, this review may resolve the issue. But, you know, I've been honest with you tonight. I can't say it will, and I think I will take that back. And I do think the way I've written my Section 25 statement, I think reflects some of the feedback that you've already given. But I've just wrote a note just to challenge myself about being honest within that statement. And I think have a couple of people have seen it. But let me take that away. But I think, you know, some of the comments about, you know, I think I no longer talk about balanced budget over the next 3 years. I talk about reducing the reducing the level of EFS over the medium term. And that's a very different shift. And I do, you know, this report was November. You might say that's only a couple of months ago. But I think, you know, kind of certainly I would say the budget report will reflect reality. But I think, you know, it's a really good, you know, I think it's a good recommendation that I'll take away and make sure that that is reflected in the report.
Thank you. And I suppose what gives us that suppose that's how it's referenced or how it's in the next report. I think we could then sort of see as a committee where we're actually looking at in terms of reducing spend. Councillor Carlin said has to come, but in a way that doesn't make it sound like we can fix everything. We can take, you know, stop that £603 million of EFS in 5 years. Have I summed that up correctly? Okay, we're now going to segue, which is not quite the segue, into the budget scrutiny recommendations, which are on page 59, still on agenda item 9. So these are the recommendations that all the panels put forward at the end of their scrutiny on budget, and Ovian Scrutiny as well put forward their recommendations. So the purpose for tonight is for us to go through, as all the chairs, to look at the recommendations that each other's panels have made. And I hope you've had a chance to do that. And if there's any questions that are arising, please say. I mean, I've made a couple of notes as I've gone through, but otherwise, if people are happy with the recommendations, obviously we don't need to discuss them any further because they've already been agreed through for the panels. So really, this is just a point of clarification, anything extra, or if there's something another chair member wants to say. So I'm going to start straight on adults and health because that is the first one that comes up, and that's me. We've made comments on the general budget gap. We've asked for a cabinet response. I'm just going to ask to see if there's any issues that anyone's got as we go through. Put your hands up if you have. Right.
Sorry, just to note, this is page 59 in the supplementary agenda pack. So there was an updated version published in the supplementary agenda pack. So if you don't have a copy of that, then I've got some spares here just to make sure everybody's got the right page.
Okay, just to check, has everyone got the updated supplementary pack in front of them? Right, excellent. Okay, so that's fine. So we've got the next one is the general exceptional financial support. So I had a response back, an extract from the Treasury Management Strategy is provided at the bottom of this document, which includes this information. To be honest, that wasn't quite enough information that we were expecting from the panel. So I would like to look into that in a little bit more detail and put it to cabinet, but only just because of, I think there isn't the time now to do the response back to OSC. So we've got the little table at the bottom, which gives us some, but it doesn't give us quite what we were asking for as a panel. And that may be just miscommunication on my part that I didn't ask enough information at that point. So I'll put yes on a cabinet response back to that one, but it'll be, I'll go offline and discuss that. Is there anything else anyone else wants to put onto that one? Okay, right. The Better Care Fund. So we got a response to this, which was really helpful. So, right, having looked at the response, which was excellent, I then pricked up my ears and went, oh, there's significant financial risk across partners in both health and social care, but this is significant policy change in 27-28. So this is in advance. However, I also noted, which I thought was really interesting, the Better Care Support Programme for Neighbourhood Health Planning, following the submission of expression of interest, expecting to receive further details on this in coming weeks. So again, that was really interesting because the Better Care Fund is quite a substantive part for adult social care. So I would like that to go back to cabinet because I would like that information. So that's not a criticism at all, because I know you didn't have it at the time, but I think I would just prefer that to come back so we could see that. So if that's okay with everyone. Right. Okay. So the new savings. Oh, sorry. I've gone on to my next one. General improvements to digital solutions. Everyone happy with that? Okay. General particular risk. We've got that's coming back to cabinet. Everyone happy with that one? So pressures and savings, supported living contracts. Yep. Transitions. I think we've made quite some good points there, and that's coming back. So new pressures. We've got adult social care staffing cost pressures. Yep, everyone happy? And then new savings, adult social care charging policy. So, Joe, glad you're in the room. So we've had a sort of looking back at the information to the panel, I reread the minutes that Dominic had done for the panel on new pressures. I suppose the bit that I would just like some reassurance around to be included in the response to cabinet. And so I'm just going to read it out and then I'll give this to Dominic, was whether information, advice and advocacy are available before changes start, not as they're produced alongside, whether reasonable adjustments are automatic rather than reactive. So whether residents can pause, review or appeal these charges without any detriment. You're smiling and nodding at me, so I know you've probably got all this information, and whether the policy risks whether this policy could discourage care uptake amongst, and we were particularly looking at protected groups. So those we would say vulnerable groups, I suppose. But yeah, so I suppose reassurance around that. So within the information that we've asked for, please could we have that part? Because we originally said in the meeting, oh, that sounds great, because we were looking at actually generating income, but on reflection, looking at the minutes, I'm thinking, hang on a minute, have we asked the right questions around protecting our vulnerable residents? So that was that. So that was mine. Everyone happy? Okay, so now we're going on to page 64, which is culture, community, safety, environment. Scrutiny panel, handover. So Councillor Gunness, do you want to go through all yours and let us know if there's any areas you'd like to amend or you want us to look at in any greater depth? Thanks.
Right, thank you, Chair. So our first recommendation was a general recommendation, but it was basically in relation to two of the proposed savings that in future, basically, if there is a proposal to reduce for whether it's capital investment or other lending money or borrowing costs, we actually also received the business case for that proposal, so that the committee can scrutinize and look at it thoroughly. The first saving was, the recommendation on leisure commercialization. We basically, this was a couple of years ago, the leisure provisions were brought in-house. So because of that, we put lots of investment and trying to kind of, increasing, I suppose the recommendation was that how effectively are we, the panel kind of felt like it was the commercialization aspect of it was quite modest, and if there could be a bit, if we could be a bit more ambitious to create opportunity for increasing revenue and income. So that was recommended that maybe OSC could look at it at some point, like in a couple of years time, because at the moment obviously the service itself is kind of just managing, but going forward there is potential opportunity to increase the income from commercialization.
Sorry, Councillor Guinness, so to be really clear, you've got a recommendation, this comes back to OSC, but you don't want to get it to go to Cabinet for any further information, particularly around 3110, around the financial assurance. And the other one that I noticed, which I thought was really interesting, was around the details of social value.
Yes.
Is that something that you would like to come back to Cabinet, or are you happy that that all is captured and comes back to overview and scrutiny? Where would you like it to go to?
I think it's clear, like there are a number of recommendations. Some of them are going to the Cabinet and some of them are. The reason we kind of said it that maybe it could come back to overview and scrutiny in future, it's because we didn't necessarily get all the committee felt like we didn't have enough information to make a reasonable kind of recommendation, and therefore it's something that maybe OSC can look at it in future.
So,
I think.
So sorry, is this going back to Cabinet? Is that a yes? Or?
Yes.
Oh, it is a yes, right, okay, thanks.
Regarding the financial option. Okay, so the okay, I suppose the yeah, sorry, I kind of slightly got sidetracked. I'm going item by item, so I'm actually on Muswellbrook at the moment. So the panel, the recommendation on this one is that scrutiny panel recommend that following the initial papers and policy on the condition of the culvert and survey regarding the maintenance plan, because this was like basically it was an expense, something got broken and it has to be fixed. It's more like how do we plan for future to make sure that we review and we allocate the resources and repair in good time. Okay, waste management and fleet purchases, infrastructure work. So I suppose at the time this was we were discussing, because it's quite a significant amount of money, resources allocated to that. So the panel kind of felt like at that time we didn't have access to the business case, but we did ask questions. So basically the response has been given. So anyone else wants to a question? I suppose yeah, so the response has been given. Tree planting, the panel considered information on tree planting budget allocation. Yeah, that's the one recommended that. meeting should be included to understand the figures and ensure that correct reverse and consistent allocation. Yeah, so it wasn't entirely clear how much resources was allocated for tree planting and when all of that is going to be.
So do you want, so sorry, from
Yeah,
the
sorry.
response,
Yeah.
I read it and I wasn't sure what the tree planting budget, and I read the minutes as well, and I
Yeah.
couldn't determine that. So do you want this to go back to cabinet
Yes.
for further information? Okay, that's a
Yeah.
yes. Right.
Analyzed if the schemes are not delivering. Okay, the clean air zones.
We had slides distributed to the panel on Friday on the clean air schools. I'm not sure if everyone managed to read them. I did have a quick look, but yeah, this is quite a big one. So I wonder if they should go back to cabinet, because I don't think members all have had the chance to have read the information around in all the slides.
Yeah.
And I think it's probably helpful to have that information spelt out a bit more substantively.
Yeah, that's, I'll support that. Councillor Connor, can I just?
Sorry, Zoe.
Oh, sorry, you want.
I just wondered if I could help with that item. I think the information that was circulated on Friday was about the school streets projects. The item that was taken out of the capital programme is called the Clean Air Schools Zone project. So obviously they have similar outcomes, but they're not the same project. So I just wanted to make that distinction, because what you'll review from the information pack on Friday separate that the funding's not been continued for. So just in terms of what you review, in terms of what's already been circulated.
So Councillor Gunners, considering what Zoe's just said, do you want further information? Because obviously Zoe's given us slides on a different section. So it's different. You want further information around the Clean Air Schools Zones deletion? Because we've got slides around the school streets project, which, as Zoe's pointed out, is the same.
So this project that's been taken out of the capital programme was never developed. So there isn't a slide deck about the project because it's never been developed and it's come out of the capital programme now. So the slides you've got separately are the very successful school streets programme, which has the same objectives around improving air quality, and that's why we wanted you to have those slides.
No, that makes sense. Councillor Lawton.
Sorry, can I just clarify, because something that says here is the panel that asked if those schemes, by not being delivered, are basically being delivered through another means.
And schools, but the school streets project has a list of schools it's tackling, and this project would have been a different list of schools. So in the broadest sense, both projects are tackling.
Councillor Gunners, this obviously was deleted, never happened, or it's never started. So yeah, so not to go to cabinet because there's no information on that. Yeah, okay.
Before I mean, I've sort of finished obviously on that. I just wanted to say that the recommendation of the committee in the initial actual there was a list of them, and in terms of where they need to be going for responses. So it's on that as well. So I thought they were slightly different in this paper than the minutes of the meeting paper, which is attached to the main agenda item. Just a clarification.
Okay, I'll check that with the scrutiny officer for that panel. I've not seen that myself, but I will check that.
We'll double check that and make sure that you're happy. If there's anything there that you think should have been included and needs to go to cabinet, then I think we'll just as a committee agree now that can go forward if there's been anything missed off from here. Okay, so give you reassurance that nothing will get missed. Okay, thank you.
Thank you, Chair.
Okay, thank you very much. We've got the Housing Planning Development Scrutiny Panel. Councillor Small.
Thanks, Chair. The first general comments on the budget and MTFS from the housing panel was surrounding voids. We have a voids target to reduce to 1%, which I believe is sort of best practice. And it was around improvements, and there's a response given around the improvements that have been made, addressing the challenges that have arisen recently in procurement and in negotiations around the unions and the workforce. So we have a response. There's, I guess, a question of whether the committee would like to send either a recommendation to Cabinet or seek clarity from Cabinet around whether the 1% target is still in place and whether the officers still, Cabinet still deem it advantageous to hit the 1% target. One, considering the challenges, and two, considering a large portion of the voids that we have are as a consequence of the neighbourhood move scheme, and that is being reviewed. This says this is being reviewed an end-to-end process, so it's largely clarity for the committee around whether 1% is still the goal, whether it should be the goal, and what changes might be made as a consequence of that.
I think I would, especially around this area. I think it's quite a topic of interest, isn't it? So this is yes to cabinet, but with the provision, but with those areas that you specifically have highlighted. Yeah, I'm happy. Anyone else? Yeah.
Yeah, no, that's fine. Could I just ask, Chair? Sorry. So this is effectively a request for further information. So does that come back to us by email prior to the meeting, or is it provided at the cabinet meeting? So it's slightly just a procedural question.
Obviously, this meeting is the opportunity to comment on all further information. So I think we'd have to circulate it by email and as a matter of urgency. And if there's any further comments, then I'm not sure. I guess that could be put forward to cabinet. But really, this is the opportunity to consider further information. We don't tend to do it a second time.
I suppose the ask is that goes to cabinet, with the cabinet to specifically respond to those points that you've just brought up in relation to this area of concern that, this is,
Yeah, just particularly, I think it's a target question, and I think that's a sort of a cabinet objectives question. With the further information gives clarity as to the how, and we just still want clarity whether 1% is still the goal, and whether that is deemed achievable. Thank you. Sorry. The next one is the new savings, the reduction in floating support contracts. So the panel discussed this. This is a proposal which officers have laid out. They think saving can be made without impacting service provision, but not all members of the panel felt assured that this was the case, and so it was looking for further assurances to be given around explaining why we think we can still provide the same level of service and that we won't be giving ourselves a further headache down the line. It's a support contract, and so the thinking being, if you get rid of the support, you might have that might have consequences which cost you money. Officers have outlined that they believe that this was a service that was not delivering value for money, and so it's a saving that can be made without impacting the outcome. But the panel wanted further assurance about their thinking behind it. The next one, so we asked originally for further assurances around, I'm going to take the next two sort of in tandem. We asked initially for further assurances around sustainability of the long-term borrowing costs in the HRA, which we've discussed with Taryn tonight and with Councillor Carlin, because we also had concerns around whether these were sustainable levels of debt. And as I outlined at the beginning, actually the detail that we're given in the response is very helpful around identifying what metrics the officers are using around what is sustainable and what isn't sustainable. But those metrics don't currently appear in HRA papers, and that's largely to do with the timelines at which we're scrutinising and the fact that the business plan for 30 years goes longer. So I would like to change one of the recommendations, which is the next recommendation. The assurances were very helpful, but I fear that if we go and we ask the Cabinet to give consideration to the publication of an HRA debt management plan, we may get the same response. And not least, they may also respond to say we don't need to because the HRA doesn't need to be repaid, and we will rehearse the conversations we've had this evening. So I did print a copy for folks to have a look at. But should I read it, Chair? Is that useful? Or okay. Yeah, no, that's fine. Excuse me, you'll have to listen to my boring voice again. But the recommendation is the panel notes that while the 30-year HRA business plan and model provide a long-term assessment of financial viability, it does not in itself provide a mechanism for regular member scrutiny of HRA borrowing decisions or their interaction with the Council's wider pooled debt and treasury management arrangements. The panel therefore recommends that Cabinet considers introducing an annual HRA debt management statement alongside the HRA budget and capital strategy. The statement should summarise the Council's risk appetite for HRA borrowing, the key prudential metrics used to assess affordability and sustainability within the HRA model, how these are informed by sector practice and relevant peer benchmarks, and the cumulative impact of HRA borrowing decisions on the Council's overall debt position. The panel considers this would strengthen transparency, support effective scrutiny, and ensure alignment between HRA investment decisions and the Council's broader capital and treasury strategy.
Sounded very good to me. I have got no concerns with that. No. Okay. Yes.
Great. The next was on tenant affordability assessment. The HRA currently bakes in, at least for the next 10 years, an assumed increase to be able to sustain the long-term borrowing costs and the investment. And whilst we're projecting long-term into the future in terms of borrowing, the panel thought it was incredibly important that the long-term consequences of continuing rent increases, assumed rent increases annually, be assessed by its impact on tenants. We know that we know that happens in year, but that at some point we assume it would cross an affordability threshold, and that might start to affect things. So that's the recommendation. And finally, on the neighbourhood move scheme, so we understand that the neighbourhood move scheme is being reviewed, and so the panel wanted to add our weight behind while we're looking at the neighbourhood move scheme, considering the difficult financial picture we're in, that where the neighbourhood move scheme doesn't have a beneficial impact on the housing register, that we should consider whether this is still advantageous to include. So just as a quick way of overview, the neighbourhood move scheme is offered based on a priority list of urgent cases, cases where you'd make a huge gain in where there's under occupying and so on, going right down to the final category, which is those that just live locally but would be offered a neighbourhood move, even though it would have no net gain on the housing register. And the council and the panel wanted to offer our weight behind a suggestion that should be reconsidered when we review neighbourhood move scheme.
Thank you, Councillor Small. That was very succinctly and very informative, actually. So I'm just going to check, because otherwise it does look like we've forgotten children's. We haven't, but Councillor Lawton, I think you've had a very different. You've had a sort of a much more robust, I think, within your actual budget scrutiny, and I'm just checking with you now that there isn't anything else that you'd like to bring other than what's in the minutes for us to note.
Yeah, so we obviously, we went very in depth and scrutinised the budget. I don't want anyone to think that we sort of forgot about that aspect of the meeting. And I think it is all set out pretty clearly in the meetings. The pre-agreed savings were delivered. We were happy with that as a panel. The new budget pressures that were identified were essentially due to rising in certain areas staffing costs, and there seemed to be very little recommendation to be made on that. There were queries, and you can see that in the minutes about specific cases. For example, there was one aspect about subject access requests, when they said that you are allowed to only extend deadlines for complex cases. The demand basically of complex cases has gone up, but they still feel they need more staff. That was queried very robustly. Do we need that then if it's kind of still allowed? But again, the service seemed to feel very clearly that yes, it was still outstripped in what the service could manage. There were a couple of kind of investor save measures around both foster care allowance increases and accommodation for care leavers, which again the panel was happy with. It seems to be really good programs that long term will be positive, even though they have a pressure. And again, then there was also the school condition surveys, which again is very little you can do about that, especially given the RAC issue and stuff that I'm sure people will have followed. So to be honest, the panel were happy with what was presented to us. We did also consider, and this will come to the next one in the minutes, but I might flag it, the issue of school financing and how that sits. Children has tried to look more in depth at that than we have possibly done before, because our schools are in many cases running in a deficit at the moment, and how that affects our budget. That sits in a slightly separate pot at the moment, but as far as I understand it, that could become a council problem if that pot changes in the next couple of years. So how that looks is something we might just want to keep in our minds. But again, Children's is aware of that, and it is sitting there now in Project Scrutiny. So overall, yeah, we did the work and got those answers, but actually the Director of Children's Services and the kind of financial information we were given seemed to satisfy demand. Thank you.
Thank you. And just to note that that the minutes are in the main packs of the children's, so you can look at those and see all that hard work that went on in the panel, and the actions that came out from that, I think, within that. Okay.
Sorry, I should say, if anyone from the panel does have something they feel wasn't recommended that should be or anything like that, of course, I'd be happy to take it, but there wasn't anything identified by us.
Hey, thank you, Councillor Lawton. So now we're going to look at the Overview and Scrutiny Committee. So this committee, obviously, we all sit on. So I'm going to go through things that hopefully you'll be very aware of. So we've got the general. We said about useful to receive more details around the saving proposals. Now we've said cabinet response no, but I've always done yes to those, because then we get clarification at cabinet that that's going to happen, and that tends to feed back into the officer response. So I don't know what you think, but I don't think there's any harm in asking that that's sort of agreed. I'm sure it will be. I can't see why cabinet won't agree, but it just, I think, strengthens it when I've been pushbacks happen in previous years, and I've tried to get sort of certain aspects through. So independent sounding board. So we've got the information for cabinet, but acknowledging when the information is available. So we'll obviously look to officers to get that clarity around that. So if you could just let us know if that will be going to this cabinet, or how that would go forward if we don't have that information.
So there will be an update on that in the full draft budget report. Yeah.
Okay, excellent. So debt levels. So we've got at the moment, we've got a response from the finance team. Treasury management update was provided to audit committee. Now I did try to follow the links, and I got pinged somewhere else. I'm not quite sure why or how that happened. I just wanted to ask the committee if we were happy that that was actually just going through to audit, because I thought we should have this at OSC. I didn't understand.
Did we not have this earlier in the meeting?
But yes, but it's now as one of our recommendations. So do we want that as a yes?
Can I just, I think the discrepancy, I think because it doesn't come in the budget papers, it comes in the Treasury Management Strategy, and the Treasury Management Strategy only comes at this point as opposed to the, so I think the reason it comes up is because we asked the question when we were assessing the budget at the last meeting before Christmas. We didn't have that information, but we do get it at this stage. So I'm not sure whether that's the usual state of play or whether that's the most advantageous, but I think that's why we've asked for it, and it's here now.
So the link is to the Q1 in-year Treasury update. So that will provide you with the existing borrowing position as of November. The TMSS that you've seen this evening also obviously articulates the existing borrowing position as of what we know now, plus the existing borrow over the course of the MTFS and any new borrowing. So that's absolutely right. We could probably provide you with it, it's obviously in the TMSS already. So we didn't have it at the time when you asked for this, because obviously the TMSS has just been published.
So this is kind of a procedural point,
Yeah.
really, because we meet as 5 different bodies to look at the bits of the budget that are under our and under our specific remits, and then we meet as we are this evening and look at the budget as a whole. But there did seem to be some lack of clarity over whether we were supposed to be looking at the budget as a whole or just ratifying the recommendations that had been made. So and this seems to be this recommendation seems to speak to the same point, in that the overall debt levels of the council are about the overall budget position, and we have seen that this evening at this meeting, which kind of meets what we're looking for. And yet the problem seems to be that we were trying to look at the overall budget at the previous meeting. So maybe we just need to think a little bit about procedurally how we deal with the budget process and make sure that it's clear what's happening at which meeting.
Yeah, so I was going to suggest actually, and I was going to put that one at the end, but a recommendation is that we do have a meet after tonight and just work out sort of what point we get what information and make sure that's the most useful point for us, because otherwise we are out of sync. So yes, thank you. So I'm not sure that's a cabinet response required. I think that's just, we just need to have that as an offline meeting and get some, clarity on that.
Between
Yeah.
us, really.
Yeah. Okay, so we've got the monitoring process. So we've got that going to cabinet about, I think it's obvious what it says on that. Any questions on that? Nope. We've got the strategic property services. Again, yeah, happy. We got new pressures. So we've got increase in bad debt provision. Then we've got ongoing pressures related to housing benefits. We've got election costs. We've got removal, unachievable income targets. So that's not going to cabinet because, so we said about the targets for challenging advertising should be included in the tracker, so we can track it more effectively rather than this going to cabinet. Happy? Yep. And then implementation of the corporate landlord model. Right. So we've got no on this. I'm just going to check. So I'm going to propose a question here now. This was brought up in the main pack tonight, and I didn't bring it up in the main pack because I knew it was coming here as this, and it was on page, I've got 82 and 98, so it must be mentioned twice. Correct me if I'm wrong at this point, because I'm pulling out information that we received in the main pack, and I'm looking at our budget recommendations. So if this is saying something different, then please let me know. But I've got here that papers explain the corporate landlord model has exposed significant unfunded property costs, including national non-domestic rates, which are business rates the council must pay its own buildings alongside utilities and maintenance. So the question that obviously was coming from that, if these unavoidable costs continue to rise, have we got any buildings or services at risk because of that increased costs? And if so, is that a question we should be looking at here about the implementation of the corporate landlord model around the risks associated with, and is that a question then we should be asking cabinet for, around the information on that? So I'm just going to go to Taryn to ask if I'm asking the right question at this point.
Yeah, I think you are. And in the November report, there was a pressure of 1.75 million, I think, associated with not necessarily the implementation of the corporate landlord model. That hasn't created the pressures, but it's uncovered pressures of 1.7 million. And we reported that back in the November report. We, as I mentioned earlier, and I'll kind of mention in my verbal update, we've been relooking at pressures, kind of over the last couple of months to make sure that we've got a more realistic estimate. That will come forward as a revised estimate in the final draft budget report that goes to Cabinet. There is a reduction as a result of the work. So there is still some pressures around utility costs, business rates, and coupled with that, we've also got the business rates revaluation that happens from April 26, which impacts on our own building. So I suppose in answer to your question at this stage, the additional costs aren't necessarily associated with any risk to any services, but they are pressures that we need to fund in next year's budget. But we also need to look at the way we kind of use our assets. I think this recommendation here, when the corporate landlord model was implemented in April 25, actually, I think the recommendation here is that OSC get regular updates on kind of progress with that, whereby you could look at both how the implementation is going, but also, you know, progress on those pressures, any efficiencies, assets more generally. So I think that's, so in answer to your question, there's not a direct risk to any services. We have funded, we will be funding the pressure to the 26-27 budget.
So we wouldn't get any further information sending it via Cabinet. There's not going to be anything new that's going to be added. And what you're saying is that actually we should put it on a tracker for OSC.
Yeah, yeah. I mean, what will go to Cabinet is the final estimate of the pressure for next year. But I think your discussion was more about how do we look at that wider, in which case I think it's probably almost on the tracker as a bit of a work program project update that you get at OSC during the year.
Okay, so I suppose it's how that is taken. So I think whether, yeah, so I think we have to have a discussion offline. So Philip, did you want to come in?
Or so obviously it'll be formally recorded in the minutes. There may be other things that you want to pick up on as part of the wider process. It doesn't necessarily need to go to Cabinet, sort of administrative thing that we can pick up ourselves.
No, indeed. I just want to make sure that, because sometimes you know, you mention this and it just gets lost in the next year. So whether that we could ask that specifically is brought out in the papers, sort of to follow up, just so that we've got some, yeah, so we know where that went to, rather than it just sort of emphasis has changed and we don't necessarily always get the follow-up on that. But it seems like quite an important model to be going forward. So I think that was, yeah, okay. So North London Waste Authority, any questions on that? No. New investor save, digital on board push. We're going to monitor that one in year, doing budget scrutiny. So that's on a tracker. I can see a tracker coming here, Philip. So new savings, reduced business savings and support. Okay, so response from the Corporate Director for Culture. Jess, do you want to sort of comment at this point? Thank you.
Yeah, thank you, Chair. Jess Crowe, Corporate Director for Culture, Strategy and Communities. So provided a bit of an explanation already. So the question was, what risk might there be to business sectors that might not be receiving support as a result of this review? I think when Councillor Gordon appeared in front of the committee previously, she sort of spelt out the new channels of communication with businesses that have been put in place over the last year or so, and those things will continue as our way of reaching all businesses. So the Business Bulletin and the relatively new Business Forum, which there've been a couple of meetings already. So those ways of reaching all sectors will still continue, we envisage, and wouldn't be affected by this saving and proposal. But what we want to do is review our existing inclusive growth strategy, Opportunity Haringey, which is a few years old now, and since it was published, there's been the London Growth Plan, which is really kind of looking carefully at what are the priority sectors across London. And so what we want to do is sort of mirror that work and make sure that we're focusing our business support on priority economic sectors for the borough, and make sure we're sort of targeting it in the most useful way, and we're, you know, supporting businesses in the most useful way, and aligning with the kinds of support that businesses are able to access through London and Partners and the other sort of London-wide channels. So I think what we can't say at the moment is what the impact of that review will be, because we need to do the work, we need to do the review. We've got a sort of commissioned piece of work underway at the moment. We're identifying the stakeholders that we need to speak to, both internal and external. And so we want that review to test whether the sectors that we'd set out in Opportunity Haringey are still the right ones in the light of the London Growth Plan, which has used, more up-to-date data than we had at the time of producing Opportunity Haringey. So, I mean, more than happy to come back to the committee once we've done that piece of work to kind of be able to then answer the question in a bit more detail about, potential impacts. But I think until we've done that detailed work, we can't say specifically which businesses might be more affected, but hopefully the reassurance that we are still planning to provide that sort of method of communicating, giving businesses updates about what support might be available, both from us and from other bodies, will still continue, such as the business bulletin and the forum. So that work would continue regardless.
Okay, just checking with the committee. I just wonder, I mean, because this is really important for councillors across, we're all talking to our local, residents, businesses, and sometimes we're not, I mean, I do read your bulletin things, but I was wondering when you've got this plan, sort of more formalised, I was wondering if it was possible to do maybe an all-member briefing as well as coming back to scrutiny, because I think there's an awful lot of councillors out there that would really appreciate understanding this in a bit more detail. I know I've struggled to try and find the right information at times, so I don't know what you think. That'll be a positive. Yeah, okay, as well as coming back here, that'd be really helpful, because I think that, all of us. Okay, thank you. And then last one on capital programme, we've got reduction in digital schemes. Digital is a significant area of spend. So just to say that in a couple of the other recommendations, I think, especially in ours, we mention digital and that information coming back. I think we noted that digital went across a lot of the areas, not just OSC ones that we were looking at. I wonder if we want to sort of group the digital ask to cabinet rather than we're just asking from adults and asking from, if there's something we should be asking about digital across the entirety, because there's many aspects to this, isn't there? There's the savings that that we're hopefully making with increasing the digital offer, but there's also, I know that there's been a savings proposal within that because we don't think we need certain aspects of that digital programme anymore. And there's also the risk that we have brought up as councillors. We've seen digital change before and it hasn't quite delivered, so we've got that worry and that risk. So do we want sort of amalgamate sort of any digital offer, Councillor Small?
I think personally, I kind of feel like we have a bit more work to do as a scrutiny panel on what exactly our asks or probing questions or details are across the board on the digital work. I fear if we ask for a bit more information at this point, we'll get the same sort of breakdown of info that we've had, and that it's probably more advantageous for us to dive into it again as a scrutiny panel with our respective hats on, and then ask some recommendations or questions that are a bit more probing and specific.
Okay, we can put that on the tracker. So thank you very much. So that comes back to OSC. I mean, I'm happy with that. I think just as long as we've got sight of it somewhere, because otherwise, again, this is such a big area. And I think for OSC, I think it's really important that we understand how it's affecting all the areas. Okay, so I think that was, hang on, if I
very briefly on the election. Just we briefly touched on the recommendation on the election costs, but I just wanted to flag there was also some additional information provided, which is on pages 79 to 81, which is provided by the corporate director, who's obviously here if any questions are on that extra information.
Any questions on the election costs? Obviously answered very well. We probably should have said that in advance, shouldn't we? Yes. Okay. Right. In which case, that concludes the scrutiny for agenda item 9. So thank you to my colleagues for all the hard work. And I really want to thank officers. I know we say this, not many times, but I think we really do appreciate the hard work that goes into producing these reports. You coming to these meetings and you are
Thank you, Chair. And I'll say a little bit. I'll say a little bit about the settlement, but I'll also talk about some of the work that I've kind of alluded to tonight that we've been doing over the last couple of months since you had your last update. So, last update that came to you was in November. We've continued working through all the various parts of the budget to get us to a draft budget that will be presented to Cabinet on the 10th of February, published on the 1st. So back in November, based on the latest information at the time, we were forecasting, and we touched a bit on this earlier in the agenda, we were forecasting a budget gap position of 57 million. This was before any impact from the funding reforms. It was based on the latest estimate of pressures at the time, and it was assuming that the new savings, some of which you've spoken about tonight, but have also gone out to public consultation, would go ahead as planned. So it's based on that assumption. So since this date, we have continued. So if you got the report in November, that would have been based on our in-year position, probably I'm going to say August, at the end of August. So we have been continuing to monitor month on month. I'm really keen that we try to get I'm going to say the most accurate and robust budget that we can for next year. So we have continued to look at the various parts of the jigsaw. We've also had the provisional settlement has been published, and I'll just talk through a couple of kind of the main parts. So provisional settlement was published on the 17th of December based on the outcome of the consultation on funding reforms. We are expecting the final settlement mid-February. We're not expecting it any earlier. The draft budget that we will present to Cabinet assumes that nothing changes between provisional settlement and final settlement. I think that has been a very valid assumption for as long as I can possibly remember, up until last year when it changed between kind of provisional and final, but that's what we produced. So in accordance with the published figures, and all of this detail will be set out in the draft budget published in a couple of weeks, the core spending power is set to increase by 49.7 million over the next 3 years. I'm going to just say a little bit more to put that into context. Now, core spending power is essentially, it is made up of both council tax and government grants. And I think we've been trailing that for a couple of years now. So the largest element of that increase over the next 3 years is from council tax increase, assumed at 4.99%. So government, even though it is a council decision, a decision by full council, government will assume that councils are increasing by 4.99%. Now for us, we had already assumed that within the figures and the report that you saw, that was an officer assumption back in November, we'd already assumed the 4.99%. And that equates to 31.9 million of the 49.7 million increase over the next 3 years. So the increase in grants, if you look at the published figures, and I'm going to say a little bit more about this, the published increase in grants is 17.8 million over the next 3 years, of which just under 8 million is in 26-27. But there's a couple of things that I would really like the committee to note. So the core spending power assumes that our council tax income next year will be 151 million. In reality, locally, our estimate is it's only 145 million. So this is largely because of collection. So they make some national assumptions around collection rates, council tax bases, etc. So this is largely around a difference in, for us, collection rates. We are still just an average band C. The numbers are changing, but we, our average is a band C, and our higher levels of exemptions and kind of discounts. There is further work that we just need to do in that space to really understand that, and we'll do that in 26, 27. But that's 6 million difference where we won't be generating that income.
That has been, this is not the first time that's happened.
Yeah.
They always assume we're going to have more council tax.
Yeah.
Sorry, Tara. and it's a combination, as Tara said, of PTRS scheme, which they don't assume that we're going to be giving the same level. Our CTRS scheme, to remind you, costs us around 35 million a year, of which about 17 million is statutory we have to give, and about 17 to 18 million is discretionary. There's a combination that everybody has discretionary, and the government website actually sends you to your council if you're struggling to find out what help you can get. But it's a combination of two, and they always make the assumption that we got more, getting more than we do.
So a couple of other points just to make it even and more complicated. So, you know, the 17.8 million increase in grants that I've talked about over the next 3 years is essentially their published figures. Now, when we published our report in November, we would have made some assumptions, not for fairer funding, but for the grants that we get at the moment. We would have made some assumptions about the grant levels that we might get in 26, 27. So when you actually compare to what we are going to get next year and what we had assumed when we set the November report, actually the benefit to us next year is 12.4 million, not the just under 8. However, there's been a few howevers. However, of that 10.4 million, 2.3 million of that relates to children's grants, which is essentially the family hubs, etc., which if it is similar to the current year, which we are led to believe, it will come with new requirements. So that isn't necessarily
Of the 12.4 million.
Yeah.
2.3, you said 10.
Yeah. So sorry, 12.4, of which 2.3 is swing fed. So really the benefit to us is only 10.1 million. So, you know, look, it's really positive, but it doesn't come close to, you know, what will be essentially just over 40 million of service pressures just service pressures, not interest costs or anything like that, just pure service pressures that we need to fund in next year's budget. So look, it is a positive. You know, I think it could have been an awful lot worse. So if you look back to the consultation that was published back in June or July time, whenever it was, we were set to lose quite a significant amount of grant, potentially up to 40 million over the next 3 years. So it's a really positive. I can't remember if I've given the committee the update on why it changed. There were kind of 3 or 4 key main factors. So do stop me, Chair, if I'm repeating. So essentially it is that the indices of deprivation now take into account housing costs, which I think is really significant for Haringey and for London. It also uses the up-to-date deprivation figures that as at 2025 that had been published a couple of months ago. Takes into account up-to-date population data. Is not a real driver for us, but it's good to use. But it does take into account up-to-date spend data, which is really important when you think about some of the increased spending that we've had certainly over the last 2 years that I have been here. The other thing is, which wasn't expected, is that those authorities that benefited from the for us, just over 5 million, 5.4 million recovery grant in the current year, that will continue. And also our funding floor, i.e. the maximum we can lose, has been secured at real terms rather than cash terms. So again, for Haringey, that's quite significant. So those are the kind of 4 or 5 main reasons why it flipped. So look, really positive, but it's still, you know, for all the reasons that we've talked about all night, it doesn't come close to dealing with some of the pressures that we have got. So the other bit of work that we have been doing is that as I said, we've been looking at our pressures. I'm really keen, as much as they are quite scary numbers, 40 million on service pressures. It was 50 million in the current year. If you think back to the March budget, I'm really keen that we use the most up-to-date information. So we've been keeping it under review in the current year, looking at the overspend position, and our budget will be using period 8, which is a later time period than what we did last year. The total is now or will be. I think numbers have stopped moving. The total is, as I say, just over 41 million, which is largely, if you look back at the November report, it is largely in line with what we were reporting in November. There have been some ups and downs, but as a totality, it remains the same. I suppose where the biggest change, for the reasons that we've talked about in the Treasury Management report, is in our non-service budgets. So that is typically around our interest costs and our minimum revenue provision. We have done quite a lot of work, one in terms of coming up with our assumption around exceptional financial support, but also we have done a piece of work with Eileen Close, our Treasury advisors. I'm really keen that we have got some confidence in our interest cost budget and our MRP. So we've done that bit of exercise, and that had kind of identified a couple of anomalies that we have updated. In terms of savings, you saw the new proposed savings in your report back in November. I haven't, unlike this time last year, there isn't any new savings that have come forward to you tonight. What I would stress, setting aside the conversation that we had last in the previous agenda, I personally do still think there is always a space for efficiencies and management actions. It should just be the bread and butter of what we do. It shouldn't have to be a separate process. You know, given our financial position, we are really trying to drive a culture of everybody thinking about almost every pound that they spend, and we've got some work to do. So look, we will still do that. I don't mind giving you the example in my area. I always say, don't I, commercial property, you know, I have to make sure that we're bringing in the income that's due to us. That isn't a saving that you'll see in the budget or a new savings proposal. Actually, I should just be doing that as kind of business as usual. So the consultation closed on the 6th of, so as well as kind of the recommendations from yourself, the consultation on the public kind of budget consultation process closed on the 6th of January. We're currently working through that. The feedback of that will be presented in the draft report to Cabinet alongside the recommendations for here. I won't say anything about, I was going to say something about exceptional financial support, but I think we've actually said everything I was possibly going to say. What I would say is that, you know, the draft report, we won't know the outcome of our application for exceptional financial support. Probably, if it's anything to go by, last year, it came out a couple of days before the settlement, but it could come out the day of the settlement. Therefore, that will be after the papers are published for public cabinet. It may be just before the public cabinet meeting if that comes out before the 10th of February. The budget report and my section 25 statement and all of that will be as on the assumption that that application is approved in principle. So it isn't actually approved until we close the accounts. That is the exact same assumption that I made last year. So just really wanted to highlight that. And then the capital programme, in your November report, you essentially saw the proposed schemes for removal and the new schemes, and they were part of your scrutiny process. The other piece of work that we have been doing is looking at the profile of the spend. So based on the current year, trying to get the profile of spend, particularly for some of those bigger schemes, as accurately as we possibly can. You will know from the in-year monitoring reports that we move budgets quite a bit from quarter to quarter. So we want to try and do our best to try and get the programme as accurate as possible. The budget report, of course, will include the full capital programme and also my funding assumptions. I should say the funding assumptions on the capital programme, we set them when we set the budget based on how we think we're going to fund the capital programme. We do take stock as we go through the year, and when we close the accounts, it could look slightly different. That is for a couple of reasons. One, we could get grants coming year that we hadn't expected, or higher grants that we hadn't expected, and we would always use borrowing as the last resort. And plus, I suppose just a reminder that we have to set a budget on how much we think we're going to borrow. I just really want to echo the point that, you know, the day-to-day treasury management is about not borrowing until you really have to. So our budget almost has to reflect a worst case scenario, but we don't actually borrow. So, you know, quite often through the year we'll have cash balances, all the grants come through in one go. We won't actually borrow. And that's why you sometimes see variation. So we might have set a budget and we have to. However, quite often or not, our borrowing is slightly lower in year than what we'd anticipated because we can use cash balances. So that was all I was really going to say. You might have other questions, but everything will essentially come together as part of the draft budget report. We have done some updates to the HRA business plan. We haven't Sorry, there has been no announcement on rent convergence. It may come through in the next couple of weeks, but I personally think it's probably unlikely. We have been, that ongoing refining of the capital programme. And I should have said, actually, probably one thing that's important for both the general fund and the HRA, we have, on the basis of the recent cut in interest rates, on the advice of Arlene Close, we have updated our assumption on the interest rate. So on the general fund, we were assuming 5.5%. That's now reduced to 5%. It's quite, it can be of quite significance, and particularly on the HRA where the capital programme is larger, their borrowing rate is 4 basis points lower, so their interest rate has been updated from 5% to 4.6. So it does make, that's a broad summary without we are still desperately, we'll be at the 12th hour pulling together the final report, but I thought it was just helpful to give the committee just an outline of some of the work that we've been doing over the last couple of months.
Sorry.
Oh, okay. I didn't know who to look at, sorry.
That we as a committee should be particularly focusing in on, because I think a lot of what you've said tonight we've covered, but is there anything within that you're thinking, okay, the direction of travel from the government or from answers, there is something else happening that we just need to be particularly focused on?
I would like to say there is, but I really don't think there is. I've shared with you the headline figures from the settlement, the provisional settlement, and actually that is now published for the next 3 years. The certainty is great, but we now know that that isn't going to solve. We are expecting something on SEND. I don't think it will come in time to impact on anything in relation to this budget. I also think there'll be a series of consultations to go through. I think we are a long way. Look, the big change, hopefully you picked up my verbal update, is essentially the exceptional financial support and therefore the impact on the interest costs and the minimum revenue provision. But I think I've talked very openly about that tonight.
Okay, other questions? That's Small.
Thanks, Chair. I just had 2 questions. The first was on now we have the 3-year settlement. What we can do differently now that we have 3-year settlement. But also, I guess that's possibly a question as well for us as scrutiny, as what we can do differently now we're not spending the first few months assuming what may or may not happen. The second is on, you were saying around the assumptions that government have made around what we can obtain via council tax. I think that was partly answered by the difference in the CTRS and what's compulsory and what's not. Just in a sort of are they being too stingy or are we being too generous, or is this just a political discrepancy and choice around those? Because a reason I'm just asking, they're saying we think you need this amount of money and we're saying that's actually £6 million less than we have. So if you think we should have that, you should give it to us, etc.
Yes, so they do make some national assumptions around the CTRS scheme. So we might want to dig into that in a bit more detail. I don't have that detail to hand. I think for us and our collection rate is lower than what we would like. So they make a national assumption around collection rates. Our actual collection rate is lower than that, and that has quite a significant impact. So when I say when we have to set our budget, we have to look at the number of dwellings that we've got is increasing, and we know that from our house building programme, private developments, that's increasing. However, when you have to do a calculation. I'll try not to get too technical. There's an appendix to the budget report, but essentially we need to take the number of dwellings, we apply exemptions, council tax reduction scheme, but then we also apply collection rate, and our collection rate is lower than what government would assume. We need to do some work over the next 12 months to try to improve that collection rate, or at least understand whether that is our new collection rate. It is about 3% lower, and that is that works out to quite a significant reduction in council tax income. So that is one of the drivers. Plus, also they do use a notional level of council tax. £2,000 is what they will use in 26-27. We know in Haringey our level of council tax is below that. Yeah.
It's a combination of all of those things. And the really annoying thing, of course, is that you used to get council tax benefit, and if you're in receipt of housing benefit, you automatically got council tax benefit. Was fully funded by the government. It was one of the things again that we lost 10 to 15 years ago. And they gave it to councils to administer, and then cut the level of grant until we had none of it left. So it went from a government-funded council tax benefit to a local authority funded CTRS. The difficulty is that there's always a kind of sweet spot, because if you're trying to get money from people who have no money, then whatever you do, you're not going to get the money. So that, so obviously it needs to be constantly assessed, but as I said, the government expects us to be giving more generous than statutory. The interesting thing is, Tara, just to reiterate that, because I'm not sure if you got it, was that most years we've increased the number of properties, and that's gone into our council tax base as increase. This year, in actual fact, although our properties have increased by 800, is it 800, Tara? 600, 800? I think it was 800. I think it's 800. Yeah, it's 800. Yeah. In actual fact, the number of people who are paying council tax out of that 800, it's flat. So we're not actually, although the properties increased, the number of people paying council tax hasn't. So that would imply CTRS and exemptions on one-bedroom properties. People are living on their own, etc.
Okay, thank you. I just want to very quickly ask, sorry, Taryn, because we
Yes, sorry, let me just have a look. So in terms of next year, so for 26-27, so by the end of March, so the interest on exceptional financial support is estimated at 8 million. So this is based on the figures that we're assuming at the moment, and minimum revenue provision of 2 million, so 10 million in total. In the current year, so 25-26, those equivalent figures are estimated at 3 million for interest and 300,000 for a minimum revenue provision. I'm going to look at MRP on exceptional financial support. We still don't do until the year after. Is that the case? Or yeah. So the reason that the minimum revenue provision also is much lower in this year is that you start paying MRP the year after. Very complicated, yeah. Another local government accounting adjustment.
So that has been provided as part of the information that we sent through. It's on page 79. So it is there, yeah. Yes. And in the TMSS, but yeah.
Thank you.
Two more meetings to come in this municipal year. Next meeting is on workforce, and we're going to be looking at